Good morning, everyone. We are jumping into the end of our last chapter. So just a quick refresher of where we were. We were working on the Robert and Margaret Marshall file. That one we're going to take a look at. So if you have that one, I'd like you to reopen that one. I'm going to do the same in just one moment. I'm also going to share my screen. I'm going to touch on a few last things that we didn't do. Some of these are going to be very, very important. So I want to spend just a little bit of time talking about what happens with split pension. Remember for split pension that we have a lot of things that are automatic. So split pension, the computer, if it determines something is eligible to split and it is beneficial to split it, it will do that for you in advance, which is great news, but we have to be able to explain that to our clients. So I want to make sure that you are aware of that. I will also remind you we have the comparative summary. You're not going to be using it all that much in this course because we're not doing that many files that have multiple years data, because you'd have to go back and create all those years of data, and that's a lot of work. But in a real world setting, we often can use this to see what the history of split pension has been. So you will have times where your clients will have had a split pension every year and they're used to it being a certain amount of money. And then you might have a year where they have a different source of income or there's been a sudden change in their income. You're also going to see a sudden change in their split pension. So this is a good way to see the history of what's happened. And then if it's different, even if it's not different, but especially if it's different, you want to take a look at it and find out why it's different. One more thing to remember is just the mechanics of a split pension. There are so many different things affected on a tax return when you split pension that even the smallest change can result in a lot of extra administrative work. So if you have prepared a return for someone and you have printed everything and they have signed everything and you got to the end and then your client comes back and says, oh, I forgot this tax slip, can you put this in? If they find a little bit of a deduction or a little bit of income, as soon as you enter that in the computer, it's going to change everything. And when it changes everything, it's also going to require you to change every signature page that you've done. So it is important to remember if you're in an office setting, if you have everything signed up, normally adding one small thing isn't going to change that much, and sometimes it will have no effect on the return. Anytime there's a split pension, it really means taking all the paper that you've printed, everything that's signed, shredding it, and starting again, because so many things change when we do split pension. Even more important to remember if you're going to do that after the fact. So if you have a client who has already filed their return and there's a split pension on that return, and now they're doing an adjustment to fix something, you need to remember that that adjustment is going to change a lot more than just the one number. So normally to do an adjustment to add a little bit of interest income or an adjustment to add a deduction in that we had forgotten is a one-line adjustment. It's very straightforward. If there's a split pension amount in there, that adjustment could potentially change literally everything. It could change who's claiming the medical expenses, to claim who's change who's claiming donations. It's going to change credits. It's going to change amounts of what is being split. All of those things have to be reflected for in that adjustment. So just be careful if you're actually working on someone's real-world file. Whenever you're doing an adjustment, before you file that adjustment, take a quick look and see, was there a split pension? How many more things is it going to change? What I will do in those scenarios, more often than not, before I do the adjustment in my computer, I will print a copy of the tax return summary for each person, one for each of them, write old at the top of each of those pages, put it on my desk. Then I will do the split pension in the computer. I will do the adjustment in the computer, allow the split pension to be calculated, and then print it again, print the new summary, put new at the top, and then I can highlight each line that's different and see everything that's changed. And I will always remind myself, if I've done an adjustment and it changes the split pension, I also have to generate a new T1032 and get signatures for that as well. So something to keep in mind. I'm going to go back now into our report on split pension. I did ask everyone to look at this at the end of last class and get familiar with it. So I'm going to review how it works. And then we're going to talk about what is the critical option for overriding if we have to be careful about how much net income a person can have in order to access other benefits. So the way that this report works, and anytime there's a split pension, this report will be at the top on the left side of your tax return. On the left side of the screen, we have what the calculations would have been if we did not split pension. I had a client come in who insisted that they didn't want to do split pension because it always ends up with a worse result. They were very confident they'd always done the returns by hand. This would have been about 10 years ago, and they were sure that split pension was a bad idea and it shouldn't be done, and they didn't want to have a split pension. This was a really useful guide that I could give them to say, let's take a look at that. Let's talk about it and see how it works. So you can see without doing split pension, Robert's net income is $51,000, Margaret's is $15,000. After we do the split pension, Margaret's income goes up and Robert's income comes down. And right off the bat, you can see why there might be some benefit to that. Then it's going to show you in the middle every line that is changing in a positive sense or in a negative sense. Because remember, when we add income to one person, it may reduce some of the things that they get, or it may cost that person more money. But as a family unit, it is more beneficial in the end. So the age amount is going to change. Robert is going to get more age amount. Margaret will get the same amount that she had before. So we're increasing his age amount, which means for the family, we're increasing non-refundable credits. Spousal transfer is going to be lost, however. So Robert will not get a spousal transfer, but that's still going to work out in the end. So you can see each line that is changing. At the bottom, you can see what is changing for them in terms of refunds and balances owing. So we can see that in the old system, without doing pension split, Robert would be paying almost $4,000, and Margaret would get a $500 refund. And then the net family balance owing would be $3,436. So that's what collectively as a family they would owe in this case. After we do the pension split, it's going to change. Now, Margaret isn't getting a refund. So we've taken her from getting money back to the government to having to pay money. But you're also going to notice that Robert's amount owing has gone down significantly. So now as a family collectively, instead of owing $3,436, they're only going to owe $2,241, and the total savings to the family of doing the split pension is $1,195. That's a good thing. We want to save them that amount of money if we can, but we have to always be careful. So what I'm going to recommend you do anytime you do a split pension, take a look at the net income after the split of each person, and then ask your clients, are you receiving any benefits that are tied to your net income? So you might have a scenario where Margaret is living in a nursing home because she requires more care than she can receive at home, and that nursing home might have a sliding scale of cost depending on her net income. And maybe she'll tell you, as long as my net income is under $28,000, I get these benefits or this assistance. And if my net income is over that amount, I will lose that. So you have to sort of figure out what's going to happen and make sure you don't cost your client more money than they're saving. So if we save them $1,100, but she loses her rent-controlled assistance, or she loses her pharmacare, or she loses something else that's going to cost her significantly more money than that, we have to be able to fix that. So how do we do that? We need to do an optimize or an override. You're always going to do the optimize on the file of the person who is splitting their pension. So the transferor, the person giving the money away, is the person you're going to do the optimize on. And then we have to find out how much we're going to change it. So I'm going to look at this and I'm going to see that we are splitting $16,500. That's what the computer is recommending. And it's going to end up in a net income for Margaret of $31,604. If I know she can't have a net income more than $28,000, I'm going to get my calculator out. I'm going to find out what $31,604 minus $28,000 is. That's $3,604. I have to reduce the amount I'm going to split in my pension by that amount of money. So now that I know that, I'm going to go into Robert's return. I'm going to choose Optimize. and you're going to see under optimize, under federal, you have split pension income here. I'm going to say OK. Then it's going to ask me, default is do the best thing possible. In this case, I'm going to choose to transfer a specific amount to the spouse. So how much? Well, I was transferring $16,500, but I have to reduce that by the amount that I said I wanted to not go over. So I have to reduce it by $3,604. I'm going to do that. I'm going to limit my split to $12,896. And then I can go back to my split pension, and now you're going to see my net income is the dollar exact to the dollar that I want, and I don't want it over that number. It's going to change the benefit to the family. So when I do this, it's going to change pretty much every number on the tax return for both of them, or most of the numbers on the tax return for both of them. You're going to notice they're saving a little bit less money than they were before. So they were saving about $70 more. So it's costing them $70 to do it this way, but she won't, in this case, lose whatever those benefits were. Okay? So that's how you're going to do that. Every time you do split pension, please stop for a minute and think, is the net income going to be a problem? Okay, I'm going to take that data entry out, but if you have any questions, let me know. This is a good time to ask those questions. Okay, so if there aren't any questions about that, we're going to move on to the last thing that I want to talk about, which is what happens very frequently with seniors. Remember, most seniors don't have much tax withheld from their returns, so they have to pay their tax in installments. They need to prepay in installments. If that's happened, you will get that information from Represent a Client. So Rep a Client is going to have the information about installments that are paid for this tax year, plus any future ones, plus any past ones. If you need to find that out, you can see what was paid. It does usually show up in the autofill my return. That might depend on when the last installment was paid and when it gets posted. So Represent a Client is the place to go to confirm it. We have to get it into the computer. So let's assume in this case, and I'm going to add this here, let's assume that Robert did pay installments. And when we look at Rep a Client, the amount that he paid was $2,500. Where do we enter that? Well, if you use your Smart Start, you can go down quite near the bottom, and I'm going to see if I can find it. You're going to find installments and deductions at source, and say continue. Or if you know your keywords, you can use install method with one L for install, which is the reason I don't use that keyword, is because I can't spell it. So installments and deductions at source down at the bottom. Install method, you're always going to choose government method because we are always reusing this to report what the government wanted it to be and what we got from the government for the Rep a Client. So the other ones will let us do calculations if you wanted to estimate for your client a method of using installments that is other than the government method. Again, if you think you're going to do that, it is risky. So I would say if you're planning on doing that, I usually do those calculations by hand, and I follow along the instructions that we have. When we're reporting installments that were actually paid, which is what we're doing now, we're going to say government method. Then we get to say install paid. What did they pay? And the answer is federal total installments. That's always the line we're going to select. We're not going to pick the other ones. Federal total installments for 2021, $2,500, and that's it. Other sections are not relevant to the tax return, so we're not going to enter them. If I go to the tax return now, we're going to find it's not going to change the split pension because this happens at the end of the return, but it is going to adjust Robert's income. So Robert will now have received the tax deducted based on the pension split that we calculated was beneficial, and will have tax paid by installments showing up at the bottom. Now we're going to have a scenario where Robert is getting a refund, $1,172.93. Margaret is owing $913.47, but what they can do in this circumstance is take Robert's refund and use Robert's refund to pay Margaret's balance off, and then the family as a whole will be in a positive situation. Okay, so that is the complicated stuff from last chapter. I'm going to do now our chapter practice problems. So this I'm going to do a little bit differently because we have a lot of material to get through today, and I want to get us into the new data entry. I have given you as many lines as I can think of to help you get the right answer. So what I'm going to say is if you did not get the right answer for the first one, if you got a different answer than me, give me a red X or let me know in the chat window. Otherwise, I'm going to assume that you got the right answer, and we're just going to talk about the additional questions. So we're going to start with Olaf Bergman. Olaf Bergman had a power of attorney which he gave to his daughter Vera. His daughter Vera has been looking after him while he is having some health challenges. Whose mailing address did you decide to use in this situation? So we had a mailing address for Olaf and a mailing address for Vera. Which address did you pick? Vera. Excellent. I did as well. This is not our decision to make, it is the client's decision to make, but in the absence of being able to ask the client which one they want to use, it makes sense. She is involved in all of this. If she uses his mailing address, she needs to make an extra trip to drive to his house to pick up the mail. So we're going to have it go to her. That's what we're going to put in the computer under mailing address. It's the thing that's going to go on the first page of the tax return. So if I go in here and I found my Olaf Bergman, you're going to find in my data entry, I have used Vera's information and I have not put her information in here because I don't need to reproduce it. So I'm going to go to the tax return, and on my first page, I will have care of. That tells the government that there is a legal representative situation, and it's going to have Vera's information. Okay, good. If Olaf was a new client, what administrative steps would you need in order to complete his return this year? What would you have to do for Olaf? You would have to send the power of attorney to the CRA, so you're going to scan it and you're going to send it to them and let them know. And then, thank you, Helene, you're also going to need to generate a CRA authorization form. So this is in your textbook. You have seen me do it quickly. I'm just going to remind you how to do that if you need to do it. The key word that you're looking for is authorize. And you want to tell the computer, we don't have authorization for this person. It's not already on the file. We want to generate an authorization form. So we're going to say CRA authorized cancel representative. It's going to give us a warning. That warning is telling us you need to print this and sign it and electronically submit it. So what I'm going to do is go in with my warning there, say continue calculating. I'm going to create a CRA authorization form. I'm going to print that form out. I'm going to make sure that it has Vera's name on it because she's the one who's going to sign it. Print it, Vera will sign it. I will then send it to the CRA. I will get a confirmation that has a warning on it telling me that they're not going to process it until they've looked at the power of attorney. And then I'm going to wait until I get the power of attorney. But at this point, I can go back in and find my authorize again, and I can put a check mark to tell the computer that I have sent it. I won't have to do that in the real office, but to make the warning go away, we're going to do that as a step to say, yes, we have thought about electronically submitting this. Okay. If you're wondering, it is possible to do a return without having represented a client and without having autofill my return, because sometimes processing these things takes a long time and we still have to file the return by the deadline. So we do have a system for working around that. It means we have to rely on the slips that the client brings us, and we also have to get an override code within our office to prove to the CRA that we have done all of the work that we possibly can and that there's a reason why we're filing that return without being able to double check everything. And we have to warn the client that there may need to be an adjustment after the fact if it turns out there was more information we didn't know about. So we can still file a return without having all of those helpful tools like represent a client and autofill my return, but we can't guarantee that it's going to be as accurate as possible because we just can't check anything. So can do it with autofill. Without autofill, it means you're typing everything. So if you're wondering why you're practicing typing all of this when in real life we're going to be copying things over, that's why, because beginning of the year in February, a lot of those slips aren't uploaded, and we have situations like this where we can't do autofill my return. All right, I'm going to take that out. And then I'm going to flip the switch a little bit and say, what if he wasn't a new client? What if Olaf was our longtime client who's always come to H&R Block, and he's authorized this in years past. He personally authorized this in years past, but now Vera is going to be signing things. Do we need to get a second authorization, or can we just continue on because Olaf gave us permission in the past? So Helene, it's interesting. We can keep representing him. We can keep doing autofill my return and represent a client because he has given us permission and he hasn't taken away. I would still do a new one, but I would do it after I finish the return. So I would do the return with all of my tools, my autofill and my represent a client and all of those things. And then at the end, I would do a new one, get Vera to sign it and submit it, because that means that I have both Olaf's and Vera's permission to represent Olaf with the CRA. But you don't want to trigger something that is going to block what access you already have. So once you have access, until a client takes it away, we continue to have access. We've read the power of attorney, so we know that we are able to do a return for Olaf based on Vera's instructions. So we have permission to look at his file, and he's given us permission to represent him with the CRA, so we can continue to do that as well. Yeah, I would still get the next one signed, and I would still submit it. I would just do it after because I want to make sure the return goes through first. Good. What tax credits would you discuss with Vera to improve Olaf's return? So I'm thinking about what she might be applying for in the future based on what we know about their case. So if I go back into the file and I pull up his information, what do we know? His health is not the best. He's been hospitalized for a week. She's coming to his house twice a week to look after him. What might she want to apply for that will benefit him in the future, that will benefit him? So we're not thinking about her yet, we're just thinking about him. What tax credit might he be available for? Disability. So if she doesn't know about the disability tax credit or what the requirements are to qualify for it, this is a good opportunity. We have lots of clients who know as much about tax as you did before you took this course. So if you remember what it felt like back in September when you didn't know any of this information, that's most of our clients. So we can give her that information and say, he may not qualify, he might qualify, or if he doesn't qualify now, in 6 months if things get worse, he might. So here is some information. You would take this to your doctor. Here's how it works. Think about it. If you do get that, you can help her know how to fill it out so that it will be set up so that she can receive transfers if she's the one caring for him. You can make sure that it's set up to adjust prior years. If it turns out that he should have been eligible not only this year, but a couple of years ago, make sure she knows how to do that as well. That's information that we could give her that would help Olaf on his return. Good. My next question after that is, what advice might we give to Vera for her return? And we have to be careful here. Before you answer the question, I want you to take a look at Olaf's income. So he has taxable income of $45,631. Okay. Now that we know that, what advice might you give Vera for her return? Is there something she might be eligible to claim? Is there something that you might have thought of, but you're going to think because of that income, maybe not? So caregiver is an option, but caregiver, you have to be careful. If she's not financially supporting him, if she's just emotionally and physically supporting him, then she won't qualify to have him as dependent. If he's paying for the necessities of life, if he's paying for his own shelter, his own food, his own clothing, his own medical supplies, if he has the ability to do that without assistance, then she won't get him as a dependent for caregiver. But Helene, you're thinking the right one, and Marisa as well. Primary caregiver tax credit in Manitoba sounds closer to what she's doing. Remember, she needs to have been helping him with his daily needs so that he can stay at home as long as possible for 90 days. And she's at his house twice a week and probably doing more things when he's in the hospital and all of those things. So she may qualify for that. So if we tell her about that credit and she applies for it, she might get an additional $1,400 on her tax return. Good. I want you to remember when you have a case in front of you, you're talking about people and their lives. You can talk to them. This is why we like doing tax. We have a conversation. We say, what is it that you're doing? What do you need help with? Is there a tax credit that we can help that will get you there? And Marisa, you're going to apply for that credit for your mom. Yeah. This is a credit that some people know about it, especially if you're in a community where you're receiving services outside the home. They may inform you of it, but I will say this is a credit that you kind of need to sort of stumble upon. It's not well advertised, and the requirements have changed recently. So it used to be a lot more work to get this credit. You used to have to keep a logbook and apply in advance and follow up every year. They've made it easier to access. All right, good. That's what I wanted to do for Olaf. Let's move on to Alan and Janet Johnson. Okay, so we're definitely doing 2 returns for Alan and Janet because split pension, you cannot do split pension with related party spouse not processed. It is not an option. So anything you want to do for pension splitting, anything you want to do for transfers, you need 2 files. In this case, it's not an issue. They want to do that. Okay. So what I wanted to know is how much additional tax are the Johnsons saving based on the split pension this year? Let's answer that question first. Where would I go to find that information? So if I do my Alan and Janet and I go into a tax return, what is the useful tool that I have to find out how much tax they're saving from doing split pension? Well, I have a very handy report. Report on split pension. I go to the report on split pension. How much are they saving? $946. Great. And then if your client says, how exactly does that work? Some clients want to know details. If they want to know details, be prepared to show them. Well, there are all of these things that are being adjusted on the return that are beneficial. So when we do this, we're going to increase the age amount. We're lowering out the income, which increases some of our non-refundable credits like the age amount. We're going to be doubling your pension income amount. We can use a little bit more medical expenses because medical expenses is tied to your net income. So if we change your net income, we can get more benefits from those medical expenses. You can kind of go down the list and show them a few things here and there that are going to be beneficial. And then at the end of the day, if you take a higher income person and you lower their income a little bit, it's going to save you some tax as well. All right, Helene, you didn't get the refund answer to this problem. Let's find out where it went different. And what I'm going to do for that is I'm going to suggest that we take a look at some of the line numbers here. I'm going to guess that that might have been an RRSP situation or a prescription situation possibly, or a charity donation. So line 21000, let's take a look there. You had a different split pension amount? $11,103.18. Okay, so if it's a different split pension amount, it's going to be related probably to income or deductions. It could really be anything. Let's find out what the other numbers are. So let's start at the top. Did you have your other employment income? That would be my first guess. Do you have a figure on line 10400? Yes, you do. Same number? Good. And then we have OAS and CPP. Pensions, 27.5. Okay. Interest, 399.34. Okay. So then we're going to be looking at deductions next. Then we're going to be looking at medical expenses, which I think are on hers and mine. But if we go down to hers and we look at medical expenses, let's make sure we have all of them. Uh, 265,617. So that might be the problem. If we go to your data entry for Alan and we take a look at other income, did you put box 118 or box 119? That's the first one I want to check. So in the T4A Sun Life, on whatever his name is, Alan, I think. T4A for Sun Life, other income needs to be box 119, not 118. If that's different. Life insurance is not a medical expense. Okay. And then the next one that I want to check, let's take a look at all of the numbers here. Medical, we have prescriptions, dental, glasses, and Blue Cross premium, 700. Ah, you missed some of the Blue Cross. Okay, that was the confusion. Here we go. That I can explain. And it's a little tricky to figure out how that works. So for Blue Cross, it's based on when it was paid. So for most of our clients, Blue Cross is, if you're a regular employee, you'll have a payment every month for Blue Cross. And that's why we need to prorate things out, because if you have a total amount on your tax slip, you know that that total amount was 12 payments that happened on certain dates. So medical expenses are always when they were paid, not the period of time it covers. It's when it was paid. Which is why in this case, if you have the rare circumstances where you have a client who pays a single medical premium in one lump sum per year, then we don't have to prorate out. It's just that's the date they paid it on. So you don't need to claim half the amount. They paid all of it. If they paid all of it, claim all of it. The prorating happens when the lump sum that we have is not from a receipt. It's from something that is actually supposed to be 12 receipts, and then we have to decide which dates each of those payments happened and decide which payments we're going to claim. Okay, so if you update that one, it should fix it. And I'm just going to make sure that that is what it said for here. That's the wrong one. I'm on Olaf. I want to be on Alan. Yeah, so they pay annual premiums in one lump sum. When it says all year, so yes, if it says prescription throughout the year, we haven't really talked about that, but let's make sure we review that. If it's prescriptions for the entire year, you're going to pick December 31st, December 31st, and then just say prescriptions. The difficulty in doing that is if you are changing medical last date, you have to think about which ones it's including. So we do this frequently when we have prescriptions. We ask our clients to go to the pharmacy and get us a printout for the whole year. Once I've decided on my medical last date, I can either, if I'm changing it from the calendar year, I can just add up all the columns up to the last date that I want. And rather than entering every single prescription receipt in with every single date, because that would take me a long time, I just do a lump sum summary, identify what my last date is, and then attach the medical receipt to the client's file. But if it's a calendar year, it's really easy because my summary page from the pharmacy will have the total from the end of the year, and it will say January, December, and then I can take that number. So in my data entry, I take the last date out of the full year that I'm using. Again, you want to be careful doing that when you have individual small receipts because it gives you abilities to play with your medical last date. If you need to know the next year, what was our latest receipt that we put in, it can be helpful to have the latest date in there. And that's going to be a question of how often are they claiming medical expenses. In this family, with those prescriptions, they're probably claiming medical expenses every year, so we're probably using the calendar method every year. Good. These are excellent questions. Okay, so my next question was going to be on whose data entry did I do the medical expenses and or the donations? So I have done medical expenses for Alan on Alan's, and on Janet, I have done medical expenses for Janet on hers. And the donations, if they tell you who did it, that's entirely up to them. So if Janet was the one making the donations, I'll put the donations on hers. If it's a mix of the two of them, I'll put them wherever it is appropriate. And if they're both jointly doing it, then I will put it on the family head because it makes no difference. So that's where I did them. Anna, your spouse information looks different on the side. Is it spouse or is it one of the other ones? So you might have picked 2020 or you might have picked another one, or you can turn that off if you don't want to. But all this does is it just shows the difference between what I had entered on Janet versus what I entered on Alan. May not be in the same order as mine. It will depend on what order you put all the tax slips in. Okay. So my next question for you, I'm going to go back to the case for this one. We know in this case that we had a T4 RSP, box 22 from a spousal plan. What would have been different in this case if we also had an RSP receipt for Alan? So let's assume that Alan decided to put $1,000 into an RSP, spousal RSP for Janet this year. What would be different? It would be an early spousal withdrawal. Then we would have to go in and do a whole bunch of data entry to make that happen. I'm going to tell you what I do, which is when I do my autofill my return, and I'm talking about RSPs and there are spouses. So I don't do this for every T4 RSP I get, but if I have spouses and I have a T4 RSP that I have downloaded, I will look at that receipt and I will enter in the spouse information. I want to have it in my computer, partly because it reminds me to think about early spousal withdrawal, and partly because it's information that I may not download as easily. So if I'm not downloading it easily and it's sitting in front of me on a receipt, if that client comes back to me a month after I've done their return and says, oh yeah, and I forgot I had this RSP receipt, can I do an adjustment for that? I'm going to go back into the file, and rather than trying to find that spousal information with what the information I have on RepaClient, which hopefully will get better, but right now in that one scenario it can be a little tricky to find, I'm going to go right into my computer and go, oh, that's going to cause an early spousal withdrawal. Now when I do my adjustment, I'm going to adjust two things. I already have the information there. So whenever you're doing T4 RSPs with spouses, make sure you're finding out, is that RSP from a spousal RSP? And if so, what SIN number is connected on that spousal RSP? Go and do your data entry now. The rest of it I didn't have to do. I didn't have to say early withdrawal. I didn't have to put in historical information or any of that because he hasn't contributed in the past. But if he had contributed in the past, we would be changing it. Good. The hardest thing at this point in the course is going to be remembering how to catch the little things that you are going to forget to do. So looking for transfers, looking for early spousal withdrawals. If you find them, if you go looking for them, you will find them. If you don't look for them, you're going to think they don't exist in the world. So you'll happily file lots of tax returns and you'll think, oh yeah, no one ever does an early spousal withdrawal. And it's just because you're not looking for it. So you didn't notice that it was happening. All right, now if Janet was receiving government benefits she was entitled to due to having a net income below $28,000, what changes would you recommend to the return for this year? So for this answer, I'm going to go back into my report on split pension income. If she is receiving a benefit from some organization or a government organization that says as long as your income is under $28,000, you will get this, but if it's over that, you won't, what would you recommend that we do for this year that will be different? You should, in that circumstance, reduce the split pension. And what I'm going to recommend, because you now have this file, you can play with the file a little bit. Give yourself some imaginary numbers and say, what if it was 30,000? What if it was 25,000? How do I make the computer do what I want it to do? Practice doing it now so that if you're doing it in real life, it's easy to do. So that case, we would definitely optimize. You're going to go here, you're going to see how much do I have to subtract from that split pension amount. Find out how much you need to subtract from it. Go into optimize on his return, because he is the one giving the pension to her, and then you're going to reduce it by the amount you've calculated. Go back into your report on split pension and make sure it happened the way you wanted it to happen. So make sure it goes to the penny that you want, and that's what I would recommend. Good. And then we have Ted and Lisa Munson. We had to do a 2020 return and a 2021 return for this one. Didn't give you any extra questions, but I do want to, or did I? No, I did. I do want to give you a couple of tips first. So when I did my 2020, and I'm going to change the tax year here, back to 2020. When I did my 2020, I did not create multiple files because I did not need to create multiple files. So in 2020, what I had was related party spouse not processed. Return of spouse not processed, Lisa Munson, with her information. There was no reason to create a file for her, so I did not create one. Did all of the data entry as I usually do. We're going to have notes in this case. Hopefully by now you're comfortable with notes. If you have questions, either on the break or at the end of class or by email, you can send me the notes you got for each of these files, and we'll talk about what I recommend that you put in for those notes. And you know how many check marks you need. Get to the end of the file. He gets a nice big refund. I need to explain that refund. It's not going to be a problem. Then I would have closed that, gone back into the next tax year, and the next year in my data entry for Ted, now we're going to be doing pension splitting. So now I have to create a file for Lisa. When you create a file for Lisa, be careful to delete the related party spouse not processed. If I had a second person in here, if I said return of spouse not processed, Munson Lisa, and I had her SIN number in and all of that stuff, I'm telling the computer that he is married to two people named Lisa. Maybe they're sisters who are sharing the same name. It is going to confuse the computer into thinking that he has two spouses, and it's not going to know which spouse you're supposed to use. It's going to break all of your transfers. Your pension split won't work properly. Anything else you're doing is going to be confused. So if you have a spouse joined, hopefully you'll get a warning when you do this, but usually you don't, which is frustrating. If you have more than one spouse, your client has a problem. Make sure you only have one each. Yeah, Brittany, exactly. If they're twins and they've both named both of them Lisa, and maybe they have different middle names, but we can't put a middle name on the tax return, that's the scenario that we're in. Then you can ask Ted if he really wants to have two wives. He may not. So make sure, whatever you're doing, that you have only one spouse entered, okay? It's trickier when you're doing a carry forward because you kind of get into automatic pilot and you don't necessarily update it. So now when I've done that in 2021, I'm going to have 2 files. Okay, I had a couple of questions there. And again, this is mostly forcing you to think beyond the tax return that you've got the answer to and looking a little further ahead. So I'm going to notice that there are some provincial credits for the family in this year. Provincial credits, under most circumstances, you can choose who you want to claim them on. The default in the computer will be to give them to the family head. However, there are some circumstances where you cannot choose who will claim them. So what I wanted to ask you, challenging you on your provincial credits, can you switch this over to Lisa if you want to or not? Is it possible to give the personal tax credit to Lisa this year? You will have needed to do some research to answer this question. Hopefully you tried to answer this question. Don't feel bad if you need to do research. I had to look this one up. It's something where I thought sometimes we get to play around with our personal tax credits. We can kind of share refunds a little bit, even them out, bring our costs down for our clients. So I'm always looking for the opportunity to do that. This one I had to look up. Does anyone have an answer for me? Do you think we could give it to Lisa, or do we have to give it to Ted? So Maurice, it's not related to age. In this case, but that's a good question. In this case, it is related entirely to dependents. So if you take a look at his return, I want you to notice that he is claiming a spousal amount for Lisa. And if you dig really deeply into your provincial supplements textbook, you will find out that the people who claim the personal tax credit is either spouse, unless they are being claimed as a dependent on someone's return. So if she's being claimed as a dependent on someone's return, she cannot claim the provincial credits. So for that specific reason, we can't try to transfer it over to her. We could say Ted shouldn't claim it, but if we do, it won't give it to her. It'll just take it away from both of them. So that's one that I wanted you to kind of dig into and notice. Things are happening on the return by default. I want to make sure you're understanding what options you have and when you don't have an option. Okay. If she wasn't a dependent spouse, if she had $5,000 of income, then we could have moved it. We could have picked who was going to get it. It wouldn't have changed the amount. But because she was a dependent spouse, we can't give it to her. I think this is a good refresher of provincial credits right before we get to the end of the course. Good. How much additional tax are they saving based on the split pension? By now you know where to go to find that. So if I go into my split pension summary, we're going to see they're saving $790 tax. What additional form will you be printing and signing when they file their tax returns this year? Remember, this is new. They've never done a pension split before. What form do you have to show them and get signed for each of them? We're almost into our administrative chapter, so we have to think about that. We might be doing an authorization for Lisa, but the one that we're talking about here to file their return is T1032. So T1032, joint election to split pension income, you will have each of them sign it for each file. So in real life, we would be printing 3 copies from his and 3 copies from hers, and they're all going to look identical. And one will be available for the CRA if they ask for it, one will be for the client, and one will be for our file in each of their files. So we're going to have a nice little assembly line on our desk. I do it with sticky notes if I've prepared before the client gets there. So if we're doing what we call a drop-off return, where I'm preparing it when the clients aren't sitting directly in front of me, I make a whole bunch of little sticky notes with person 1 and person 2 and stick them on, and then they can come in and sign it. If they're sitting in front of me and I've just printed it, it's a little trickier because I have to make sure they're signing on the right line. So person number 1 on the top line and person number 2 on the bottom line. Good. All right. Again, I have not gone over the notes but I would recommend that you go over the notes. I want to point out one more thing on Lisa's return, which is a bit weird. So if I look at Lisa's data entry, her data entry is blank. She has nothing in it. So we feel like we should say no income because she doesn't have any of her own income. But if you had said no income, what would have happened when you checked your notes and diagnostics, it would have warned you it's not going to e-file. And remember, you have to clear your warnings not only in your data entry, but you have to clear your warnings for your e-file setup as well. You want to guarantee that that return will e-file in a real office. So this is going to say she does have income. What income does she have? Well, that's the split pension income. So it's a little bit counterintuitive. If you put no income in, you would have thought that makes sense. She doesn't have any income. Then when you go to notes and diagnostics, you're going to see there's a warning in the computer saying, don't do that. If you do that, it won't e-file. So I wanted to check that one. Good. It is 9:51. I think we're going to take a very, very short 5-minute break. So we're going to come back at 9:56, and we're going to jump into our tricky family separation and marriage in the year and spousal support things. So break until 9:56, and then we'll be back. Welcome back from break. I know it's a short break. Let's get a green check mark. Let me know if you're here. We're going to be jumping into our second last chapter of the whole book, so that's exciting. Next class will be our last class. So we're going to be doing a lot of wrap-up. There's going to be relatively quick data entry here, so I'm going to try my best to make sure you all have time to get this going, but we have a lot to do today, so I'm going to see if I can get through everything today. So what I'm going to ask everyone to do, we're going to start with our in-class exercise, and I have requested, it was on my whiteboard at the beginning of class, I have requested that you complete Denise Cameron with her dependent Alan Fontaine personal information and the T4, just that much. So I'm going to get my shared screen set up working. Again, split screen is a good idea. If you are doing data entry on a single computer, it can make your life a little bit easier so that you can see everything in one place. And I still do this when I'm at home if I don't have my 2 screens set up, or if I want to use my laptop and do my practice problems on the couch. So I just have the one screen in front of me. Split screen is the way that I do it. Okay, I'm going to find my Denise Cameron file. There we go. Make sure I'm in 2021 because I had been switching back and forth between years. I am in 2021. There it is. Going to see if we all got the same answer. So we should have set up a file where she is divorced. Okay. And when she is divorced, we're going to get at the end of it $2,238.23. If you got a different answer, give me a red X. That should be what we have. Okay. Refresher on dependents. Remember, the computer is making decisions about Alan that may not be what the reality of the situation is. So the computer is going to assume that Alan is eligible for everything that a dependent would be eligible for. If it turns out that there's a reason why not, then we're going to have to learn how to override that. So we're going to talk about that today as well. But for now, we can see that she's getting an dependent amount for her son, Alan. So if I go to the Schedule 5, scroll down, we're going to find over here, nice, Alan Fontaine, dependent amount. Okay. When you have a single parent with a child, you should be asking them about support because she might be getting court-ordered support. Again, we're thinking about support in different ways. Support that negates the ability to claim an dependent amount is different than when I say support received or support paid, so income that's taxable or reportable, or an expense that is deductible or reportable. Those are different definitions of support. I want to talk about that kind of support today. We're going to talk about support received and support paid. So if we have, in this scenario, we find out that she has regular support payments that are coming from Danny Fontaine. Danny Fontaine was her ex-partner. Okay, and we're going to talk about how much that was and what we need to know. So she's going to say, yes, I get $650 per month. We need to know what type of support she was receiving, and did she have a court order or a written agreement that required it. So we need to do that investigation. When we ask her that, we're going to find out that, yes, she has a court order. The court order says he must pay $400 child support every month and $250 spousal support every month. So I'm going to put that in here. So child support is $400, spousal is $250. We have to get that into the computer next. So if I go back to my data entry for Denise, this is something that is relevant to her. Even though the child support is going to Alan, it is going to be her reportable income. And this time, I'm going to go into alimony and spouse not processed. I'm going to use a different drop-down box. Up until now, we've used related party only when we don't want to create a second file for someone who is a current spouse. Now I want to talk about how to use it for someone who is not a current spouse. It's a little bit confusing. If you had someone who was a spouse in the year but have stopped being a spouse, so that's the year of separation, we're going to go down from return of spouse not processed to ex-spouse. So if I choose return of spouse not processed, I'm telling the computer she currently has a spouse. If I say ex-spouse was a spouse in 2021, I'm saying at some point in 2021 she had a spouse, but now she doesn't. And then finally, what we have is ex-spouse was a spouse in a previous year. This one gets a little fuzzy. They don't have to have been your spouse. So she could have been single her whole life, but be receiving support from someone who was never her legal spouse or her common law spouse. But we don't have another word for it in the computer. So this means someone you are receiving spousal or child support from, who you were not a spouse of in 2021. That's going to be the definition for this. So that's who we're talking about here. We have Danny Fontaine. I'm going to need to enter his information. So Fontaine is going to go here. Danny is going to go here. It is going to ask me for his SIN number, and I want you to notice that it is a blue star. You can generate a tax return without having a SIN number, but you cannot. You're going to get a warning if you don't have a SIN number in there. If you can get a SIN number, you should. It's not always possible to get a SIN number, okay? So if they're cooperative, if they're communicating, or if she has records from when they were together that have his SIN number on it, if she can give that information to you, you can put it in. If he's a client and he's in the computer somewhere but you haven't talked to him, can you go find his SIN number and put it in? No. That's important to remember. We get into this habit of we have lots of data at our fingertips. If we don't have his permission to look up his information and give it to her, we should not do that. If she can tell us his SIN number, we will put it in. If she can't tell us his SIN number, we will not put it in. I will tell you in an actual office setting, I will leave that warning there, and I will not worry that I have a warning. For the purposes of this course, and this is not necessarily a bad thing, instead of putting in a SIN number, you're not going to make a SIN number up. You can just put zeros. It's going to make the warning go away. It's not important in this case because it's not going to go on the tax return anywhere. We don't need to have his SIN number on the tax return. So having a SIN number that's not a real SIN number like all zeros is okay. So that's how we're going to clear that warning if we don't have a SIN number for him. Then we have two drop-down boxes, and we have to pick which one we're going to use depending on whether she is receiving the support or paying the support. So that is important to know. It says she is receiving it. We want to use support received. On Danny's return, because he's probably going to want to claim his support payments, some of it will be deductible because some of it is spousal support, he would do the same data entry on his file with her information, and then he would say support paid. But we're going to do received. You need two numbers for support received. You have to start with the total. So how much total support did she get? Okay. If he did everything for 12 months, So if he is up to date with the payments, you're going to put 650 times 12. And remember, you can do the math inside the window if you want to. You don't need to get your calculator out. That's going to be how much money she actually received. Then it's going to open up a second support received, and now it's going to ask you a different question. It's going to ask you, how much was he supposed to pay in child support? Not how much did he pay in child support, how much was he required to pay in child support? So remember, for child support, he was required to pay $400 times 12 months. Okay? Why is that important? What would have happened if he was supposed to pay for 12 months, but he only paid for 8 months? Well, in that case, what I would do, and you don't have to do this, I'm just going to demonstrate it, what we would have had here is 650 times 8 instead of 650 times 12. And then on the tax return, the non-taxable portion to her will be all of the child support. Taxable portion will be whatever's left over. So the computer will do the calculation for child support and spousal support, taxable versus not taxable, correctly if you have done your data entry correctly. Similarly, if he only paid 1 month, then he only paid 1 month, but he was required to pay 12, is what it would look like. Okay. In this case, he did pay 12, so I'm going to go back and fix that. What will that do on the tax return? If I go to the tax return, always check your notes and diagnostics first. It's ready for e-file. Don't have any warnings that I have to clear. When I go to the tax return now, she's going to have income from employment, and then we're going to have support payments received, reporting figure on the left. Taxable portion is the spousal support portion. Excellent. So make sure you're doing the data entry the computer is asking you to do. And remember, if you don't know what the computer is asking you to do, there is a help option for every keyword. And your textbook is going to explain this in detail as well. All right, so that's the easy part. Don't mix up who's paying and who's receiving it. You don't want to give her a deduction if it's supposed to be adding to income. Now, what if in the year, I'm going to add some more information, at some point in the year she went to court to increase her child care, or not increase her child care, to increase her child support, and she has legal fees to increase child support in the amount of $2,650. Can she claim that on her tax return? Yes. Where she claims it on her tax return, you need to look that up. I would look that one up myself. I can tell you I looked it up last night, so I don't have to look it up today. So I can do this very quickly. I want you to notice that where you put the data entry is different depending on what type of legal fee you have. So if you were just sort of going, oh, I need legal fees, and I just said the word legal, you're going to notice I get lots of different possible places for legal stuff. And that may not take me to where I want it to go unless I really, really know what I'm doing. So what I will say instead, start from the tax return itself and find your data entry that way. Does anyone remember what line number legal fees related to support goes on? It is treated as carrying charges. So because I know it has to go in the carrying charges section, which, again, don't ask me why it's not intuitive, but that is where it goes. I'm going to open up my carrying charges data entry section, and you're going to notice that there's one here that says legal fees alum. Legal fees alum is specifically where I put legal fees relating to support payments. So legal fees relating to support payments to increase support, I can put here, and it will go on the correct line. If instead I had used the keyword legal fees, that keyword says legal fees not related to the recovery of salaries or wages. That would have gone on line 23200, which would not have been correct. If, for example, she had legal fees to make taxable child support not taxable, maybe she had taxable child support and she wanted to make it not taxable, That's the line number that those legal fees would go on. And there's no real difference between legal fees alum and legal fees. It's just there's more data entry. So what you need to do is go to the return first, find out what line you want it to be on, find the data entry section for that line, and you will find a legal fees line that makes sense. So in this case, legal fees to increase child support should go in the same place that carrying charges and investment expenses go. You have a separate data entry line for it, legal fees alum. If I go to my tax return now and I look for her deductions, you're going to find I have carrying charges, $26.50, which is where I want them to be. And on my worksheet, I now have carrying charges to increase child support as well. Okay. What's happened to her tax return now? We've added some taxable income. We've also added a deduction. Should have changed the balance. If you've got a different number, give me a red X. Okay, we're going to get into the next tricky bit. So the next tricky bit that we have is how do we override the default option for the computer? So most of what we've been doing the last couple of classes is learning what the computer assumes and then deciding if we agree with the computer or not. So I want to talk about how we would handle situations like this where the computer has decided that Denise is eligible to get an eligible dependent amount. Anytime you have an eligible dependent amount claim on your tax return, you need to be filling out an eligible dependent checklist to make sure that it is valid, because there could be something that you haven't told the computer about that is going to change that. For example, maybe Alan doesn't live with her. If he doesn't live with her and we've connected their files, the computer doesn't know that. So we would have to let the computer know that he's not eligible for that reason. Maybe there is no support being paid, or there's support being paid in both directions, and this is the year that someone else is claiming Alan, and we have to say not claiming him this year. Okay, so that's something we have to think about. There are lots of different ways where we can say don't claim the person because we're not supposed to be. When you're doing that, you need to do it from the dependent. So I'm going to go into Alan, and if I have decided that Alan is not an eligible dependent, I need to tell the computer that he's not an eligible dependent. There are different levels of doing this. If you need to say he's not any kind of dependent, I do not want to have him connected for any purpose other than I just need him in there so I can claim child care. Because sometimes he's not a dependent for anything except you do qualify for child care. In that case, you're going to go transfer OV, and you're going to notice right at the top you have the option to say, this person who I've attached is a dependent, but he's not a dependent. I've called him a dependent so I can get his file attached to me, but I'm going to say not a dependent child. If I do that, I can still put child care in. I can still put some of my other provincial credits in, but it's going to override everything else on Denise's return connected to Alan. So it's going to say, no Schedule 5, he's not an eligible dependent. It's going to say for the family tax benefit that he is not her child for the family tax benefit. It's going to say for climate action incentive and for GST that he is not with her because she doesn't have custody. So it will erase all of the dependent claims for that child. Sometimes that's what you want to do. Sometimes it's not. So what do we do if we have a different scenario? Maybe you want to say, yes, he is my child. I have custody and control of him for all purposes, but because of something else on the eligible dependent checklist, he's not an eligible dependent. He is a dependent for lots of things, but he's not an eligible dependent. What you can do now is go into federal. Again, I'm going to do this in Alan's file. I'm going to choose amount for eligible dependent. I'm going to say OK. And then I'm going to say do not claim. That will take away the eligible dependent amount, but it won't take away everything else. So now he's a qualified dependent for climate action incentive. He is a dependent child for GST. Family tax benefit, he is a child for the family tax benefit. It will put him in for everything except the one thing that you wanted to take him off for. Okay. What if he is an elder dependent? So I'm going to go back into his and I'm going to say, yes, he is an elder dependent, but, let me delete this, but he's not living with her at the end of the year. So at the beginning of the year, he was living with her. She was a single parent. She should get the elder dependent amount for him. But at the end of the year, he had moved in with his father. Well, now I have a problem. If she was getting Canada Workers Benefit, she would have him as a dependent child for Canada Workers Benefit. But she can't, because I've done my Canada Workers Benefit checklist and it says he's not an eligible child for that. So I would leave him as a dependent child. I would leave the amount of dependent in, but then I would go down here and I would find claim as a designated child for Schedule 6. And I would say, just take him off to Schedule 6, please. Do not claim him there. And then if I went to my tax return for her, if she was getting Canada Workers Benefit on a Schedule 6, it would say not a dependent child there, but she would still get the other claims. So you need to know your dependent claims, because the computer will assume that he's eligible for everything. And if that's not the reality of the situation, you need to know which of those lines you need to amend. Are there any questions for how to do that? Brittany, yay checklists. I agree. I love my checklists. My checklists are great. I can't remember all those rules. There are too many rules. But every time I see a Schedule 6, I pull out a checklist and go, are they supposed to be getting this? Every time I do an elder dependent, and I'm not kidding, every time I do an elder dependent, I do a checklist because it reminds me of the rules so I don't have to think of them. Good. I'm going to add the complication just a little bit. I don't want you to do this because I will be deleting it. What if, in addition to Alan, she had another child? I'm going to say Sarah. Pick a birth date for Sarah will be 15 of January, 2006. Now she has Alan Fontaine and Sarah Fontaine. If she's not eligible for an elder dependent, and I go into Alan and I do transfer OV, so right now, if I leave him in and I have a Schedule 5, you're going to notice on my Schedule 5 that she is claiming Alan as her elder dependent. If I don't want her to have an elder dependent and I go in here and I say transfer OV, not a dependent child on Alan, what will the computer do? I have erased the elder dependent claim that the computer was giving her. What do we think will happen next? It will switch to the other one. So I want you to remember that. If it can't do the first one, it will try the next one, which is great if that's what we want it to do. If it's not what we want it to do, then we have to go in and do all the same things to decide which dependent credits she's going to get for Sarah. So more than anything else, I'm going to say when you are attaching dependents and you think there might be dependent claims, make sure you're looking at your tax return, because you think, oh, she's got an elder dependent for Alan, I'm going to get rid of that. In your data entry, you have successfully removed the elder dependent for Alan. Congratulations. The computer is trying very hard to get the best possible result for Denise. So if that was the case and I wanted to take that out, I would then have to do a new transfer OV and say Sarah is also not a dependent child, if that was what I wanted to do. Okay. So things to remember: dependents are difficult by hand. They are equally difficult in the computer. What makes it even harder in the computer is that the computer will make assumptions for you. So make sure you agree with what you have told the computer about that. Right now, I have told the computer that Alan lives with his mother, has lived with her throughout the year at a time when she had custody of him, and is still living with her at the end of the year. That's what the computer thinks about Alan. If that's not true, I may need to do some adjusting. All right, I'm going to go in and delete the extra file that I made, which is going to be way down here now, I think. Let's do it this way. So I am going to find my Cameron file, which is up at the top. And I'm going to delete the extra person that I made. In real life, you cannot delete people, but in this program, I can. So I'm going to enjoy that because I never get to do that in real life. Okay, so we have talked about support. We've talked about legal fees. We've talked about ELF dependents. I want to talk about childcare next. So here we're going to go back into our case, and we're going to notice that we have some childcare from Sandra Smith, the babysitter, and this childcare was paid on behalf of Alan. So this was childcare for Alan. Childcare should be entered on the child who is receiving it. Remember that you are limited based on the number of children that you have. So if you have a child, maybe you have 2 children and you have 1 receipt for childcare, but it is for both of them, you should separate the receipt out by appropriate amounts so that it identifies how much each child gets. Childcare is one of the default ones in dependent files. It's almost always there directly. So if I go into childcare here, you're going to notice I have a number of different options. Okay, I'm going to start with the most common, which is daycare and babysitter. Okay, if it's a daycare, you're going to put the amount that was on the receipt. You need a name for the daycare and you need an address. I cannot stress enough how important it is for you to put an address in. One of the reasons I can't stress it enough is because we're mostly not going to give you addresses in your case. So for the purposes of data entry now, because it's the end of the course and we have to give you a lot of data, if we didn't give you an address, I would like you to put Winnipeg or your city name in, just so you're practicing putting an address in. I'm not going to make you make up an address, but make sure you always put something on the address line. Okay? In real life, you need an actual address. If it's a babysitter, we're going to have different data entry. So if it's a babysitter, I'm going to have the amount, which is $19.50. I'm going to have the name of the babysitter. I'm going to have the address of the babysitter. Which is R3A3G3. And I need the social insurance number of the babysitter. Social insurance number is there. That must be in my file. When I've done that, I'm going to go to the tax return. I go into Denise. She's a single parent, so I don't have to worry about a higher income spouse. And you're going to notice I'm now generating a T778. It will have Alan's name and birth date. It will have childcare expenses paid for each person if there's more than 1 child, and each one has childcare expenses. Separate them out. Do the data entry on the child who is receiving the care. Then it will have the name of the organization, and if it is a babysitter, it will have a social insurance number. Remember, if it doesn't have a social insurance number, Denise will not get that childcare expense. So if it gets audited and she doesn't have a SIN number on that receipt, she will not get the deduction. They will take it away from her. Okay? It will have the total. If there was a child 6 or younger, it will put that in for you because you've got hopefully put the dates of the child's birthday in correctly. It will know what the limits are. If your child has an infirmity or a disability, it will increase. So a disability will increase what they get. If you have an older child who has an impairment and they are still a dependent child, they're an adult dependent child, that will be in here as well, as long as they're connected in the computer. So if you're going to be doing childcare, you have to enter the children who are going to be eligible for childcare in order to calculate it correctly. It will do earned income times 2/3 and calculate the allowable deduction. Okay. Those are the most common ones and the most straightforward ones. I'm going to add to that a little bit. I'm going to go back into Alan's file, and I'm going to say, what if he also went to camp or boarding school, okay? Camp, in this case, means a camp that you stay at. So this is not a day camp that you go to and come back from. It is a camp that you go away and stay at, or a boarding school. If they're going to a day camp and you need to put it in as childcare, you're going to pick daycare. So a day camp is essentially equivalent to daycare. The child goes, spends the day there, and then comes home at night. If you pick camp or boarding school, we're going to reduce it by the number of weeks. So in this case, camp or boarding school, say they're going away, and I'm going to say, what if this particular child is going to a junior hockey camp for 1 week, okay? And that junior hockey camp fee, I'm going to say, is $1,000. It's an expensive camp. And then it's going to say how many weeks was that child at camp, and I'm going to say 1. I need the name of the camp, junior hockey camp, whatever the name is, and I'm going to need an address. Again, if I don't have an address, just so I could practice typing something in that line, I'm going to put the city that I'm in. But in real life, you have to have an address. What it's going to do is it's going to go into the child care expenses, and I said $1,000. It limited it to $200 because it knew that there is a restriction for how much you get depending on the age of your child and whether your child has a disability. So for an overnight camp, a child under the age of 7 is limited to $200 per week. A disabled child is limited to $275 per week, and any other child is limited to $125 per week. The computer will limit it for you. Now, here's a little test on provincial credits. If they're going to a hockey camp, what can I do with some of the extra that I couldn't use as childcare? What would a receipt for hockey camp qualify for? I can use it for the fitness amount, the sports credit. Excellent. So I'm going to show you how to do that now because this is something we should be thinking about. You cannot double claim, but we can claim some. So I'm going to go back into Alan's data entry now. And does anyone remember how much he can claim for the fitness amount? What is the maximum fitness amount claim for a non-disabled child? It's $500. Good. So what I'm going to do then is I'm going to go into this sport, recreational, artistic, culture expenses. Usually, provincial credits are in a special provincial credit section. This one is not, only because it used to be a federal credit. So instead of changing data entry and moving around, they just left it where it used to be. It's only going to work on a province that has a provincial credit. But in our case, we have a Manitoba provincial fitness credit, so I'm going to say junior hockey camp. If I can spell hockey, and I'm going to say 500, but I can't double claim, so I have to take 500 off the camp. I'm going to use half the receipt for childcare and the remainder of the receipt for the hockey camp. And if I go to the tax return now and I go to Denise, what you're going to see is I'm getting the same amount of childcare I was before because we're limited to 200 anyway. And then if I go into her Manitoba credits, I should, if I can find the line number, have a fitness amount of $500, which is nice. Why can't I enter 800 and let the computer calculate it? It's just best practices. By doing it this way, you don't accidentally overclaim. So for example, if he had had more weeks, if that $1,000 was, what do I want to say, was 6 weeks. If the $1,000 was 6 weeks and I went to Denise, I would look to see how much she's getting for childcare first. And I can see she's getting all of it for childcare. In that case, I can't claim it as a fitness amount. If it was less, somewhere in between the two, I might have to restrict how much federal credit I will get. So if I did 4 weeks, she's getting 800, then I would say I'm using 800 So what's left over is 200. I'm going to take 200 off and use 200 for the fitness amount. So it's just the way of making sure you're not accidentally claiming more fitness and less childcare. You have to use it for childcare first, and then anything left over you can use for fitness. The computer doesn't do that calculation well, unfortunately. But I'm going to leave that as 1 week. Now I want to show you something else. What if he also had $100 arts camp, or not a camp, I'm not going to say camp because then I'm going to be dealing with childcare. What if he had a $100 week-long after-school art program? So he's doing some form of visual arts. Maybe he's doing a week of collage making and paper mache, and it costs $100 for the week. If it's not qualified as childcare, in this case it wouldn't qualify as childcare, what can I use that for? I can do the arts amount. So we're going to say art lessons, $100. Similarly, if it was a camp, you would do the child care first, and then anything left over, if it qualifies, you can use an arts amount for. But we're going to say in this case, it's not a camp. It's just a week-long art program that he has decided to be enrolled in. So it's $100 there. If I go to the tax return for Denise now, you're going to find my child care is what my child care was before. Then I'm going to go to the Manitoba credits. And now I'm going to have $500 for fitness and $100 for the children's arts amount with a receipt. Okay? What if he had a disability? What would change if Alan had a disability? So I'm going to go in here and I'm going to say disability yes. I don't need to say anything else because that means that he has a disability certificate on file. I go to the tax return now. First thing that's going to happen, the child care will have increased. I have to be careful to make sure I'm still reducing it by the right amount for the fitness amount. In this case, I am. And then what's going to happen to the credit here? My receipt was for $500 and my receipt was for $100, but it's going to add the $500 extra bonus. Okay? So that's how childcare works, and also how our provincial credits that might be tangentially related to childcare are going to work. Now that I've done all of that data entry, I'm going to take all of that data entry out because we're going to go back to our original case. So I'm going to take out the disability, I'm going to take out the junior hockey camp, I'm going to take out the art lessons, but this is something that you will get to practice as you go through the next practice problems. Okay, so we should now have just the babysitter, and we've taken out the infirmity, and we've taken out all of our other transfers and overrides. Should be good to go from there. Okay, are there any questions about childcare up to this point? Okay, I want to show you one more piece of data entry that will not be relevant for this file, but will be relevant when we get into other files, is what happens if we have a higher income parent and a lower income parent, and there is a Part C or a Part D exception. So this, I think, a lot of students find confusing. You enter the child care receipts on the child who the child care was given to. If there's a Part D or Part C exception, you want to enter that data entry on the higher income earner, the person who wants to get the child care. So I'm going to do this on Denise's file. It's not going to make sense on Denise's file because she is the only parent, so she's the only person who's going to get it. She doesn't need an exception. But just to show you what the data entry looks like, we'll practice this on another file in a minute. But that's where we have this child-weeks heading. So anytime you need to do a Part C or Part D exception, enter the receipts on the child, then go to the higher income spouse, whoever that is, and use the keyword child-weeks. And if you go into child weeks, you're going to see it has all of the different possible exceptions. So if the reason you have an exception is because the lower income earner attended school part-time, you're going to pick that one. That's going to tick box A on your Part C. If they attended school full-time, you'll pick that one. If they were temporarily infirm or indefinitely infirm, again, infirm and unable to care for children, not by definition all people with disabilities, but in that specific circumstance. If they were in prison, if you were separated at least 90 days during the year, but now you're back together again. And then if it's a Part D exception, are you the only person supporting it and you were in school full-time, or were you the only person supporting them and you were in school part-time, or were both of you in school full-time or both of you in school part-time? The last two we're not going to do in this course. So let's assume that I want to say temporarily infirm, and then it's going to say a number. How many weeks were they temporarily infirm? Remember, it has to be more than 2. If it was 4, I would do that. If it was how long were they in part-time, it's going to say how many weeks were you in school part-time. If you were in school part-time for 8 weeks, that's what it will be. Some of it will be weeks, some of it will be months, so you have to be careful for that. And if you want help for the keyword, there is help for the keyword, so it's going to tell you what you're entering. So are we entering weeks? Are we entering months? What do we have to say? Okay. And as always, if you're doing that, the best way to make sure you're doing what you thought you were doing, do the data entry the way you think it should be, then go look at the T778. We're going to get to practice this today as well. I just wanted to introduce it now. Okay. One more child-related thing that I want to talk about, which is Universal Canada Child Benefit. I'm going to do this very quickly because it's not going to come up that often now, but it can. You might have a parent who was eligible to receive UCCB, which has not been around for a couple of years now, but they didn't receive it at the time. They have since made an application, and this year they received some UCCB income. If that happens, you're going to have a slip called an RC62. Okay, I'm going to show you how to do that. You would enter the tax slip on the person who received the funds. Usually that is the female if there are 2 people in a heterosexual couple. If there's only one person, it will be the single parent. If there are 2 parents and they are in a non-heterosexual couple, it usually goes to the lower income earner. It's a little kind of fuzzy. You're going to put it on the person who received it. So I'm going to have my tax slip here. It starts with an R, but it is a T slip. I know that's confusing, but you're going to notice way up at the top of our T slips, we have an RC62, and you're just going to say that they received it. Received it will be in box 10. If they've had a repayment, you're going to get that, and you're going to put it in box 12. Nice and easy. Let's assume it was $3,000. There is a special rule for UCCB, similar to Canada Child Benefit. If you put that in an account just for the child, you can make that the income of the child and not the income of the parent. So in that circumstance, if it has been separated from family income, instead of it being on her income, we can make it Alan's income. So in this case, I'm going to go into Alan Fontaine. On the dependents file, I'm going to say, I would like that to be my income, please. So I'm going to go into Transfer OV, and I'm going to go into Federal, and you're going to find at the bottom UCCB designation. When I go in there, it's going to say include all of the amounts in the income of the dependent. It has to be done in the dependents file because you might have received UCCB for more than one dependent. So you have to identify which dependent is receiving which money. So all UCCB amounts are going to go to one dependent. If we did that, and I go to the tax return, you're going to notice Alan still doesn't have a tax return generated. There's no reason to file one for Alan. But if I go to Denise now and I look at the spousal amount or the eligible dependent amount, it's going to have changed because now the eligible dependent amount will have $13,808 minus Alan's income from UCCB. If I had not done the transfer the way that I did it, it would have given a full eligible dependent amount, but it would have included the income on Denise's return, which might not be what I wanted to do. So what I will say is I have shown you how to do it. It is in your textbook. If you get an RC62, I want you to go to your textbook and read up on what to do with UCCB income, how to enter it, and what options you have. And then the textbook will show you what data entry you need to use. Okay? I'm going to take all of that data entry out, but we have discussed it. If you have questions, let me know. It's much less common now. If it was a couple of years ago, I would be spending more time on this, but we're really only seeing a handful of people who are going back and applying for and receiving old UCCB benefits. Canada Child Benefit has been around a little bit longer now, so I'm going to take that out. Okay, and we're going to do one more. Oh, a question on data entry, yes. So I will wait for the question. I'll give you time to type it. Are you penalized for not using caps? No. So if all your keywords are in capital, that's fine. If all your keywords are in lowercase, that's fine too. I do the capitals for a couple of reasons. One, I'm used to it because that used to not be an option. They all were capital. And two, when I'm doing your practice problem answers, I can easily distinguish between when I want you to look at something on the tax return versus when I'm referring to a keyword. For the entries you enter, you should think about what it's going to look like on the tax return. So if you do all caps and things are case sensitive, that could be problematic. Like names, you want to make sure the names are not in all caps. And also, what are you giving to your client? So from that perspective, make it as professional a form as possible. We definitely have people who have very quickly typed things in, and unfortunately, all mail for that client from the CRA comes with no capitals, which just doesn't feel as nice as having your name, written out formally. So we're not going to mark you on it, but I would say from a best practices, remember that we're dealing with other people's forms and enter them the way that you would want them to be entered. Yep. So that is a good question. Again, a lot of things are going to be autofilled, so we don't have to do that much typing. So the little bit of typing that we have to do, try to make it look like something you would want to give to a client. All right, so I want to do one more thing for Denise. We're going to go into a different section of data entry now, and I'm going to tell you, let me see if I have this in my book as well. I'm going to tell you that Denise had some student loan interest. Oh, and Nancy has suggested I did miss one thing, which I want to mention, UCCB repayment. So it is possible that you will have to repay some UCCB. If you have to repay UCCB, that will be in your tax slip as well. You will get a tax slip. It will have a box 12. If you put it in the box 12, your client will get a deduction on their return. So that will show up there. So maybe she had a $1,000 repayment. If she'd had a $1,000 repayment and I go to her return, I go down, you're going to notice that she's going to have a UCCB repayment here, box 12 of all slips. So those ones, hopefully, as I say, it will be data entry that makes sense to your brain because you have a tax slip in front of you with a box number. The ones that are tricky are changing the income from the person who received the money to the dependent in the circumstance where that applies. So that was the tricky data entry. And again, we don't see a ton of UCCB, but it will still come up occasionally. So I definitely have had clients who have received UCCB last year. The further away we get from the program, the less we're going to see it. All right, so we're going to do one more thing on this file, and then we're going to switch over to our Adam and Eve's file, and we're going to make things even more complicated. I want to talk about student loan interest first. We're going to be doing more child-related expenses, and we're also going to be doing a lot of tuition and student-related things next, and that can get tricky too. So let's start with the easy ones. Anytime you're going to enter anything related to tuition, you want to find the tuition data entry. So that's going to be just above medical expenses. In your Smart Start, you can use your Smart Start, or you can use the keyword tuition-edu. I find that one hard to type, so I don't use that one as much as the Smart Start. You're going to find what works for you. So for this one, most of what we do is going to fall under the category taxpayers' own tuition and education amounts. Most of the time, we're talking about tuition related to the person whose return we're working on right now. For student loan interest, that's what we're going to do. It's going to be a lot of data entry in here that we're not going to talk about because it's not that relevant right now, but by the end of today, you will have used almost every line on here. Okay, I want you to go down and find the one for interest paid on a loan, and you can also do carry forward of interest paid on a loan. So if she had student loan interest from 2021 of $380, this she will have downloaded from the Canada Student Loan Program. They will have a statement that says student loan interest paid in 2021. You can also do a carry forward if she hasn't used it of what she had done in 2020. So if she did not claim any in the previous year, you can do that. Remember, you can go back 5 years. The person who claims student loan interest is the person who has the student loan, not the person who paid the interest. So if Denise took out a student loan and Denise's parent is paying off the student loan, I can't give the interest credit to the parent. The interest credit belongs to Denise. All right, that's the only data entry I'm going to do here. This is not from a tax slip, so I do not need to do quality at source for it. But I do, however, need to make sure it did what I wanted it to do. So I'm going to go to the tax return now, and I'm going to go looking for my student loan interest field. And if I go to my student loan interest field, which is down here, it's going to be close to the bottom, and you're going to see that the computer has added both years together because she can use them now, and we're going to enter them that way. Nice and easy. You can only carry it forward up to 5 years, and then we're stuck. Did you hear the credit was being eliminated? I haven't updated the most recent things, but I will look into that for you and find out. I would not be surprised. They are really removing a lot of student-related things, but I will look into that for you. I do have an update that I got that has a whole bunch of confirmations of things that are happening next year. I just haven't had time to go through every line of it, so I will do that before next class. Okay, so that's Denise's file. I think that's most of what we're going to need for it. We do have more to get through, so what I'm going to do now is I'm going to switch us over to the Adam and Eve Baines. I will be giving you another break. Not a long one, but I will be giving you one. But for now, let's find our Adam and Eve Baines file. We're going to go back a bit for this one. Okay, open it up. Do a quick check to see if we're all in the same place. We might have different numbers depending on what we had done in class. So let's see if we have the same things. I have a refund for Adam of $7,061.10. And for Eve, I have $250. And for Ruth, I have 0. So let's see if you have the same things, or if you have a different number, let me know what number you have. There may be a few things that got added that weren't in the original InClass exercise. So you have a different one for Adam. I'm going to guess that that's from the medical expenses. So let's verify our medical expenses. What else did I add in for there? And did I do the chairlift home accessibility amount? Let's verify that as well. Spouse or common law partner caregiver amount. Disability amount transferred from a dependent. Medical expenses 3585 and 14550. And donations and gifts. So we all have different numbers. All right, we're not going to have time to make sure we have the same numbers. So I'm not going to worry about it too much. What we're going to do is we're going to work on new things, and we're going to look at specific line numbers. What I am going to suggest that you do, if you're really stressed about this one after the fact, send me the file that you have at after class or over the weekend. And if you want to make sure that it kind of is matching what I have, I can make a list of the things that I have added and the things that I have taken away, and that way we can get them adjusted together, because there are just too many things we've added to this case. But I do want to start looking at some tuition related to all of these files, and when we claim tuition amounts and how we claim tuition amounts. So let's not worry too much about our actual refund or balance owing, but we'll try to make sure our data entry makes sense as we go through. So we're going to start with Eve and Ruth, and we're going to tell you that both of them were in school. Eve was in school part-time, and Ruth was in school full-time. So I'm going to start with Eve. Eve's data entry for tuition will be here. The first thing you have to determine for tuition is, do they qualify for a tuition credit? So I'm going to start with the credit first. We're going to talk about income next. Do they qualify for a tuition credit? Depends on a number of things. First of all, do they have a tuition receipt that is valid? In this case, they both have a T2202. The next question you have to ask is, if they have a T2202, are they a qualified student? Because if somebody else paid for that for them, maybe Eve's employer paid for it and did not make it a taxable benefit for her, maybe Eve went to EI and had a non-taxable EI tuition assistance. In that case, she's going to get a T2202, but you can't put it on the return because she's not entitled to a tuition credit. This will usually, and this is fairly new, will usually download directly from the autofill my return. So even when you have it in a download, you still have to ask yourself, should I be including this receipt? In this case, Eve paid for her own tuition, so we are going to create a tuition receipt for her. So again, we're going to go into the Smart Start. We're going to find our tuition and education amount section. I'm going to say continue there. I'm going to open it up, and I'm going to say her own tuition and education amounts first. It's going to ask me for the line number. If it's fees from a Canadian institution, this is Smart Business College, I'm going to put it in here. Okay, and she had $3,250. If it was outside, so if it was a foreign institution, I would put it on this line, and I would need to have a TL11A, or if they were a commuter, I would need the commuter form. Okay. If they have tuition fees in Canada that are not on a T2200, maybe it is a professional licensing exam. If it's in Canada, you're going to put tuition fees here, but you will have to determine what qualifies. So you're going to have to look at it and go, is it just the exam fees that I can claim? Are there additional fees that I can claim? You have to do some research for that. Most of the time, we get a T2202, and we're good to go. Okay. Next question is going to say is, how many months was she in school, and was it part-time or full-time? So full-time is going to give us 1 provincial credit for the education or the tuition and books amount. Part-time will give us a different one. If I said part-time and she had a disability certificate on file, the computer would treat her as full-time, so we could still say part-time. If she's part-time with a major functional deficiency and doesn't have a disability certificate on file, that's when I would use this part-time, because again, the computer will treat her as full-time if I tell the computer to do that. So disability certificate, if I choose part-time, the computer will override it and make it full-time. If she doesn't have a disability certificate on file, but I have a letter from the doctor, I'm going to choose this option here to say major functional deficiency. If it's full-time, I'm going to say full-time. She's part-time, I'm going to say part-time, I'm going to say 4 months. Okay. What that's going to do on the return is create a Schedule 11. So I will have a Schedule 11 that will now have the tuition amount from a Canadian. I'm not going to do the Canada training credit now, although with Eve's age, I should be thinking about it. So we're going to come back and we're going to fix that. But let's assume for right now she didn't have any Canada training credit limit. What it's going to do then is determine how much she needs to use this year, and the answer is none. And then it's going to say 4 months part-time. That will be filled in because I said 4 months part-time. It's going to say how much is she eligible to transfer, And then if she can transfer it and she's connected to someone, the default in the computer is to transfer it. She might not want to transfer it. She might want to carry it forward. The default is to transfer it. Who is it going to transfer to? It will transfer to her spouse. Okay. You're also going to have a provincial form. It will include the 4 months education amount if you did your data entry correctly. It will again calculate how much she needs to use this year. She does not need to use any. And then it will calculate how much she can transfer to her spouse if she wants to, and it will automatically do the transfer unless you tell the computer not to do the transfer. So now I'm going to tell you how to tell the computer not to do the transfer. So when you have connected files, the default is to transfer everything it can. If you don't want to, you're going to have a transfer OV spot. Transfer OV, you can choose to carry it forward. You can say, don't transfer any, I want to keep it. Or you can choose how much you want to transfer. So if you want to transfer to a spouse, you can say, I want to transfer 1,000 of the federal and 1,000 of the provincial to my spouse, and then I want to keep the rest for myself. Or I could transfer more. I could say, I want to do 1,500, but I only want to do 500 provincially. Whatever you want it to be, up to the maximum, you can do. What I will say is if you put more than you are entitled to transfer, the computer will limit it for you because it can't transfer 5,000. There isn't 5,000 to transfer. But when you have to go do your T2202 filling in the back, it's going to be really hard to know how much you're supposed to do. So I really cannot stress enough how important this is. Really good idea. When you're doing a transfer, let the computer do the max. If you want to change it, when you're going to do that, you're going to go back in and you're going to make it match. So if the max that can be transferred is 7,370, and for some reason I need to do a transfer OV, I'm going to correct this number. I'm going to show you why that's important later. For now, if you want the maximum, don't do any extra data entry. We're going to leave it as is. Okay? So the next one I want you to do is we're going to go into Ruth's file, and we're going to do tuition for Ruth, which is going to look a little bit different. So Ruth also has a T2202. I want you to notice that as a dependent, Ruth is already having a tuition section open. It's assuming she might be going to school, so we don't have to find it in the Smart Start. It's already there. I'm going to put her own information in here, and I'm going to say, in this case, it's Winnipeg University, well, University of Winnipeg, and then tuition fees, $6,800. From the T2202, I can take that number. I have the number of months, full-time 8. Okay. When I choose full-time 8 months, it's already going to limit a number of other things. So for example, if Ruth had earned enough money to qualify for the Canada Workers Benefit, it would have given her the Canada Workers Benefit until I did this. And as soon as I did this, I have told the computer she was in school full-time for 8 months, so she is no longer eligible for the Canada Workers Benefit. The computer will do that automatically, but you should be double checking to make sure that it is happening correctly. She shouldn't be getting a Canada Workers Benefit. She was a full-time student who was not a single parent. So for all of those reasons, most of this, the computer will adjust automatically as soon as you tell it that she was in school long enough. Okay. Now, she also had some tuition carry-forwards. So we need to enter the tuition carry-forwards as well. Eve did not have any tuition carry-forwards, but Ruth did have them. So for Ruth, we need to put the carry-forwards in. We've done tuition itself. We've talked about fees outside of the country. We've done number of months. Then you're going to notice we have these two CF lines, CF for carry-forward. The first one is federal. The second one is provincial. If she was in Manitoba before when she got the credits and she is still in Manitoba, we can take the numbers from Represent a Client or from her Notice of Assessment. If she has moved provinces, we need to do some adjusting. So in that case, we're going to do 5450 and 4300. But if she had moved, we would have to look at the rules for what happens after you move. what you get to claim for your provincial carry forward. So that I want you to remember, you don't automatically take the data entry from the CRA. If there has been changing between provinces, you may have to change this number. Okay? Federal will still be federal. Okay, and similarly, the default transfer to a parent, if she's resident in a different province than her parents are in, then when the default may have to be adjusted based on what she can transfer depending on the rules. So that's one of the reasons we would use that transfer override. Even if it's doing the transfer and we want it to do the transfer, we might have to change how much we're allowed to transfer because of those interprovincial rules. All right, so I have now entered her credits and I have entered her tuition carry forward, and we're going to take a look at hers and we're going to see what we get. So on the Schedule 11, we had a carry forward amount. We have new tuition fees. We're going to find out what she needs to use, which is none of it. Then it's going to be 8 months. What can she transfer? 5,000. It's going to, by default, transfer the maximum, leaving some available for her to carry forward to a future year. And again, tuition here, provincially, carry forward, plus tuition. Now we're going to add 400 times 8 months. Total tuition education amounts 10,000 from this year plus the old. She doesn't need to use any. It will allow her to transfer the max and save the rest. All of these transfers are going to show up on Adam. When they show up on Adam, we need to be careful, depending on what you have for your answers. If he is not needing any credits because he already owes 0 tax, we don't want to do an unnecessary transfer. So in my circumstances, this has brought his taxes owing down to 1 cent, which is good. And then provincially, I might even be wasting a few, but I would have to look into that as well. Nope, provincially, he still owes tax, so he is benefiting from transfers. And you're going to see that he's getting those transfers. Let me find the transfer lines for you. On the Schedule 2, he's going to have the tuition amount from his spouse. And then on his MB 428, he's also going to have education amounts transferred from a child or grandchild. And similarly, federally, Eve's tuition will be transferred to him on a Schedule 2 federally, and Ruth's tuition will be transferred to him as transfer from a dependent child. Okay. Are there any questions about tuition transfers before I go on? Your numbers might be different from mine, but your transfer lines should have numbers on them. Okay. So the next thing I want to talk about is what we do if you're transferring tuition for someone who is not connected. So maybe you have a client where they are the university student and they're coming to you in your office and their parents are not clients of H&R Block. In that case, the default for the computer will be to use or carry forward all of their tuition. So if there is no one to give it to, it will save it for the person. In that circumstance, let's assume Ruth was not connected to her parents. We didn't have a connected file for her parents. The default would be save all of your tuition for yourself. If we want to change that and we want to transfer it to a parent who is not connected, we're going to use that transfer OV. This is a transfer OV inside the tuition slip again. And this time we would say transfer to parent not processed. Similarly, Ruth might be connected to one parent's file because she's living with that parent, but she wants to transfer her tuition to her other parent who she's not living with. We're not going to connect or create a second file to connect them unnecessarily. We're just going to say transfer to parent not processed, and she's going to decide how much she wants to transfer. Again, I can put the maximum in, but if the maximum doesn't make sense, the computer will limit me. I really strongly recommend when you're doing this one that you make sure that your data entry is going to match the real world scenario. So if I was doing this, what I would probably do is I would put my little question mark on to remind me to double check that number before I finish. Generate the tax return first, finish all of it, find out how much is eligible to transfer, If it's 5,000 here, and on this one it's 5,000 there, then I know that I can do the 5,000 full. If it was a different number, I would look at what is being transferred and I would change this number to something else. So maybe she could only transfer 4,000. I would put 4,000 so that it matches what the slip is doing. Okay, the computer won't let you transfer more than you're entitled to, but it does make the data entry a little confusing, and it makes it hard because it doesn't match the documents you have in front of you. Do I need something in the data entry if the client moved to another province to claim tuition? If they move to another province, what I would have to do to claim tuition is find out what the rules are for that province and what the rules are for any transfers that I might want to do. And then I would have to decide what data entry I'm going to do. So for example, if she had moved to Ontario, I would have a tuition receipt, but I might not be able to use it, in which case if I can still do the data entry, but it may not generate a return for me because she won't be eligible for any. I'll have to find out what's going to happen to her carry forwards and make that determination, because I can't give her a carry forward she's not entitled to. So if she was in Ontario, but she had her carry forwards from Manitoba, I wouldn't be able to take the carry forward amount provincially. I would have to delete the provincial carry forward amount. So all those decisions have to be made. If you can do it in your head on paper first, your job is to make the computer match what you know the right answer is. Okay. Now, if I was the parent and I wanted to receive a transfer from someone who is not connected to me, what if Adam has another university-age child from a different marriage, and that child is going to transfer a tuition credit to him? In that case, we're going to go into the file of the parent who's going to receive the credit that's not connected to them. And we're going to go and open our tuition amounts here, because tuition is always the thing we're dealing with right now. And this time when I go into tuition education amounts, I'm going to pick transfer amount from dependent not processed. I'm going to make this go away because it's driving me nuts. So if I transfer from amount not dependent not processed, it's going to ask me who is the dependent. So maybe the dependent's name is Adam Baines Jr. He named his son after himself. And how much am I going to transfer? Maybe 5,000. Then it's going to ask for a whole bunch of information. So I'm going to say Baines Jr., Adam. SIN number for the child you will have to get, whatever it is. I'm going to put zeros in just so that I can do this for now. I need the date of birth of the child, something that would make sense, and the relationship of the child. Is it your daughter, brother, sister, niece, nephew, son, and so on? This would be son. Then for provincial, I'm going to do the same. And I'm going to say maybe provincially it's 3,400, and that would give him additional information here. I need a date of birth that kind of makes sense. Let's say 0202. What, 2004 would probably do it. And what you would get on his return now is tuition transfers from a dependent. And if I can find where it is, now we have tuition amount transfer from a child or grandchild here. And it's going to tell me how much, and it's going to tell me who. So I would have Adam Baines Jr. and relationship and the transfer. So I have to have all of that as well. And then provincially would be the same. So that's how you do transfers when they are not connected. And that is a common thing that we do. So not everyone who comes in, we are not always doing returns for the entire family, especially if that student is in a different place. Okay. Are there any questions about tuition and tuition transfers and all of those things? This is tricky, but we still have a lot of data entry to do. I'm going to take a 5-minute break here. We're going to come back at 11:15, and we're going to jump into student income next. All right, we are back from break. Give me a green check mark if you're back. We're going to go pretty quickly through the next set of things. I'm going to assume that you remember all the rules about scholarships because I don't have time to remind you of the rules. I'm just going to teach you how to get the computer to do it. This is going to be another one you may want to go back with your theory first and then go back to this recording a second time while you're doing your studying. So we're going to talk about scholarship income next. I started with the tuition because the tuition already tells the computer that they are a student. We then have to think about if they have student income, how does that student income get dealt with? And I'm going to start with Ruth because I'm going to tell you that Ruth has a scholarship. It is a T4A from your city university. Very, very common. If you have a full-time student, they may have a scholarship. When I go into my T-slips, you're going to notice there are no T-slips in the dependent section. I have to add it. So I'm going to go into my Smart Start and I'm going to open up the T-slip information so that I can create a scholarship tax slip for her. I'm going to enter in my T4A. I'm going to say Winnipeg University. And then I have to find my box 105. And this is where you have to be careful if you are doing autofill and download. Because if you are doing download, it will pick the very first box 105 line that it comes to, and it will say $7,000, and that's what your download will look like. However, you have to decide what type of scholarship is she receiving. Why is she receiving that scholarship? If she's receiving it because she is a full-time student in a university or college program, then it has picked the right answer. It has said it is a scholarship, bursary, or fellowship, and I want you to put in brackets there full-time student behind the idea. The very first box line assumes that they are a full-time student. If she was a part-time student, you would have to say that she was a part-time student. If it was a postdoctoral fellowship, you would have to tell the computer that this is a postdoctoral fellowship, which is only $500 exempt, because it will do the exemption based on what you tell it. The first line, you are telling it full-time student, make it 100% exempt. If that's not what you want to do, you're going to have to change it. And then the other tricky ones we get, if it's an artist project grant, you can put the artist project grant, but you're going to have to tell the computer what the expenses were, so you'll have to reduce it by the expenses, and you do that manually, and then you put a note in your file saying why it's reduced so that if it gets audited, or I should say when it gets audited, you can prove it. So you have to really be careful and make sure you are associating it with the right type of scholarship. Now for Ruth, Ruth is a full-time student, and this is a scholarship for her to go to school, so this is the correct information. I'm going to remind you, when we did a T2202, that was a tax slip. Tax slips get check marks. If it's a receipt, it won't get a check mark. If it's a tax slip, it will. This is also a tax slip. It's a T4A. I'm going to do my double entry. There will not have been any tax deducted. And now when I go to my tax return for Ruth, I'm going to have some interesting things that I want you to look at. So if I look at her income, nothing is showing up on her income. So taxable scholarships is blank. But if I want to look into more detail and I go to her worksheet, I want you to notice the computer has made an adjustment for the T4A. So when we send this data to the CRA is going to know that we didn't forget about the T4A. We have entered the T4A and we have entered an exemption for the T4A. We have said that $7,000 is exempt. So I will be asking you to check that when you have student income that should be exempt, to double check that you did your data entry. We have to enter the tax slip, and then we tell the computer that it's exempt, which we did two ways. Number one, by entering a tuition receipt for her, that tells you, the computer, that she's a qualified student. And number two, by saying she's a full-time student when we chose which box 105 we needed. Okay, we're going to do something similar now for our part-time scholarship, which is for Eve. So I want you to notice, if you remember, Eve was a part-time student and not a full-time student. Eve has also received a scholarship. So this time when we enter the scholarship, again, if I did the autofill my return, it would say Smart Business College, and then it would go in here and it would say other income is 105, and it would say 5,000, And what would the computer do with that? I have told the computer she's a part-time student. It knows that she's a part-time student. But you're going to notice if I go here, I'm expecting to see some taxable income for a student, and you're going to notice that I don't. And the reason that I don't is by leaving the box 105 as scholarship, I have told the computer that it's fully exempt, which is not true. So I have to fix that. So this is one that I'm going to remind you of because we all forget to do this. Very, very commonly, it doesn't matter. If the scholarship is less than the tuition, then if we do this wrong, it doesn't matter. But every now and again, and this has happened to me, it is actually more than the tuition, and it is supposed to be entered as a part-time program scholarship. So when we have a part-time program scholarship, we know that it is $500 exempt minus tuition minus books. And what if I tell you that Eve paid $380 for books? So now what it's going to do is it's going to give me a scholarship income, which the computer will calculate as the scholarship minus 500 minus tuition because it knows about the tuition, but I have not factored in the books, so I have to do that as well. And here I will say the data entry can be a little bit fussy. You're going to find under tuition part-time program. Okay, and then you're going to find part-time fees. Current year fees. Now it would be nice if I could just say 380 because I've already told the computer that she had tuition of $3,250. In a perfect world, that would do what I want it to do. In reality, it does not because it's not very smart. So what we have to do if we're going to do books plus tuition, when we do current year, we have to remember we're telling the computer everything we want it to deduct. So I want it to deduct the books plus the tuition, which, yes, I know the computer knows about it, but it seems to have forgotten. I want to deduct $3,630 plus the 500. It will do the 500 for you, but the rest of it you have to tell it what to do. And if you have done it correctly, you should have taxable scholarship income for Eve at $870. If you got $870, give me a green check mark. If you got something different, give me a red X. I will go through that one more time. So what we are doing, we are entering her T4A as normal, but we have to change the T4A from box 105 default position of scholarship to part-time scholarship. That tells the computer that we could deduct 500 minus tuition. I know she has books as well. I'm going to go to part-time, say current year fees are her books plus her tuition. The computer will handle the $500 automatic exemption for me. And if I have done everything correctly, I will have $870 as my taxable income for Eve. Okay, so that is a tricky one, and it is one that you will occasionally have to do. Okay. Postdoctoral fellowship, if you enter a T4A, box 104 postdoctoral fellowship, it will reduce it by $500 for you automatically. Most important, what I'm going to say, when you are doing data entry for scholarships, think about what you want the tax return to look like first, decide what it should be, and then keep working away at your data entry until it does what you want. So if you think the computer should do something by default, put the minimal data entry in and see what the computer did. If it's not doing what you want, go back to your textbook and see what you have to add. Okay? Want to talk about the Canada Training Credit next. We're going to go pretty quickly because we still have a lot to do. We are not going to finish on time today, so I will have to see if I can squeeze some time in on next class as well to finish. But let's talk about Eve. Eve is of an age where the Canada Training Credit is appropriate. She can claim some of her tuition as a refundable credit. If she wants to do that, we need to tell the computer that she has a Canada Training Credit limit. So I want you to go now to the bottom of hers where it says CTC account, and we're going to say, what is her Canada Training Credit eligibility for this year? It is 500. So we're going to enter 500 in, and then it's going to ask us, do we want to claim it? I'm going to say, let's leave that blank and see what happens, because I'm assuming the default will give it to her. If I don't want to give it to her, I can say no. Okay, and if I claimed an amount in the previous year, I can enter that as well. But let's start with, this is her first time claiming it. We want to see if she's going to claim it. I'm going to go to her Schedule 11 now. We're going to see her tuition is here. We're going to see her Canada Training Credit limit for 2021 is here. It's going to say, what is she eligible to claim? She's eligible to claim up to 50% of her tuition this year to a max of whatever her limit is. It's going to do that. It's going to make the claim automatically. I didn't say yes. I didn't say no. I assumed the computer would do the default, and it did. So there's my $500 refundable credit. That's going on to the tax return on line 45350. It's going to reduce her tuition credits, which is going to reduce what she can transfer. But it means she will get a refundable credit now. So that's going to change everybody's numbers again. If I go to Eve's return, now I have the Canada Training Credit at the end. Remember to think about Canada Training Credits. Up until now, they have not been automatically downloading. So they are something that we have had to go look for. We don't know if that's going to change in the next update. Maybe they will start to be automatically downloaded. But you should remember, if you have someone who is a student and they are over a certain age and under a different age, remember to think about the possibility of a Canada Training Credit. Then you can go looking for it. The data entry is fairly straightforward. Just tell the computer that they have a Canada Training Credit that they can use, and as long as they have tuition, it will give it to them. If you want to override it, if you want to say, no, I don't want to do this, I can say no, and that will override it. And if I say no, it will take it away, and then it will allow a bigger transfer. So you can play around with the numbers a little bit if you want to play around with the numbers that way. I will say a refundable credit is almost always better for the family. So I can't think of a circumstance right now where I would want to override it. Probably I'm just going to leave that $500 for her, and if she wants to, she can give it to Adam. Okay, we have half an hour to talk about change of marital status. So here we go. This is going to go fast. I apologize. We're going to do the data entry as quickly as we can. What I'd like everyone to do now, we're going to switch our tax year to 2020. That's not 2020. That was the wrong year. We're going to switch it to 2020. And we're going to talk about a new lovely couple that is coming in, and they would like to file their tax returns with us this year. Okay, and we have Billy and we have Lizzie. And Lizzie's name used to be Snyder because the two of them got married on June 19th of 2020. So we are now in the 2020 tax year. We've just met these lovely people, and we're going to create files for them. Now, I'm going to do it wrong on purpose. So I want you to do it wrong on purpose with me. In real life, if I saw these two people and I'm setting up files for them, who would you pick to be the family head? I have Billy on one side of my table and Lizzie on the other side of my table. Who would you pick in real life to be the family head? A couple of you are saying Billy. Why? I disagree with you. Pick the person with the bigger income. The person with the bigger income will by default get the most default credits, and they probably need the most default credits. So your computer will make a better return if you make the family head the higher income person. So in real life, everyone should have said, we have these two people, I'm making Lizzie the family head. We're going to do it wrong on purpose so that I can show you something else in our data entry later. So what I want you to do now, we're going to do it together. You're going to set up a file for Billy as the family head, enter his information, enter his T4, then we're going to attach a spouse for Lizzie, and we're going to do that all as quickly as we possibly can. Here we go. So start a new family. Okay. I'm going to say a couple of things that I would like you to pick in advance. You're going to pick change of marital status for Billy in advance because we know we're going to be needing that. I'm going to enter his last name. I'm going to enter his first name. I'm going to put in his SIN number. I'm going to put in his birth date. You are going to do all of these things. He is married at the end of the year, so we're going to say married. I'm going to put in his metropolitan area. I need a phone number. They're going to share a phone line, so I'm going to put that number in. I'm going to put an email. They've decided to have a cute little joint family email, so I'm going to put that in for them. I'm going to ask if they want to sign up for online mail. They're going to say no. I'm going to put in a mailing address, which is 1775 Independence, which I need to spell correctly, Road in Winnipeg for me, R2L3K3. And I'm going to enter in his tax information. So I have a T4 for him, which is the Winnipeg Airport, 51500. Oops. Province of employment needs to be Manitoba. 2520 81370, and I have a box 22, which is 9,000. Double check my data entry for him. It looks good. And I'm going to add his spouse, add to current family, spouse, continue, put in the name she wants it to be. We're going to talk about that in a minute. I'm going to put in her SIN number. I'm going to put in her birth date. I'm going to put in CMA Winnipeg. I don't need to add a phone number or a mailing address for her or an email unless she wants to sign up for online mail. She doesn't. I'm going to enter her T4. And again, I really should have done this in the other order. It is going to cause a headache for me later. I'm doing this to create the headache so that I can teach you how to fix it. Right, I have entered her T4. When you have that done, give me a green check mark. Then I'm going to start talking at you. I know I do this really, really quickly, so I can probably do it faster than you. But let's see how quickly we can all get to the same place. Then we're going to talk about some additional data entry we have to do. Okay, I'm going to wait for 1 or 2 more people to get there. If you have gotten that far, I want you to think about one of the problems that is about to happen. So I want to file these tax returns, and the first thing the computer is going to do when I file these tax returns, it is going to match the names of the people that I have entered to the names that they have connected to that SIN number, which is a problem because Lizzie has changed her name because she got married. So that's what I want to teach you how to do next. For Lizzie, what I would like you to do is open up your Smart Start, and we're going to add 2 sections for her. We're going to add other personal data, and we're going to add change of marital status, because we're going to need both of those things. So when you have a name change on the tax return, some name changes, we have to get the client to do it with the CRA directly. We don't do it for our clients. So if they are legally changing their name for other purposes, unless we know that we can verify that documentation and we're not responsible for that, we won't do those name changes. The CRA will do that name change, and then we'll make what we have match. But in the case of marriage, it is very common that people will change their last name from what it used to be to the name of the person they have married, and that can go in either direction, or a hyphen of that person, and that is something we can do. As long as we've seen the marriage certificate, we can do that. So what we're going to do here is we need to tell the CRA that she has changed her name and what she has changed it to. So that's where we have in other personal data a field called old name, and it's going to say what is the name that the CRA has on file for her. And in this case, the name the CRA has on file for her is Lizzie Snyder. If I say Lizzie Snyder in that field, when I file this return, the CRA will say, you've sent me the information for Lizzie Lee, who used to be Lizzie Snyder. Lizzie Snyder is connected to the SIN number. Yes, that is correct. And then the CRA will change their records, and they will start to send her information under the name Lizzie Lee. That's all they will do. They might ask to see a copy of the marriage certificate after the fact. Usually they don't. So that's all you need to do, and now it will e-file, even though the names don't match. You can also do this in the other direction. If someone is getting divorced, sometimes people, when they get divorced, they want to take their old name back. In that case, all we would need to do is see the birth certificate that shows what their old name was, or the records that they have that show their old name before their marriage, and then we can do old name is their married name, and new name is the name that they want to go back to. We can do that change as well. Other changes, as I say, people who are just changing their first name because they want to change their first name, or if we have people who are having gender changes and they're now going by a different gendered name, usually they have to do that with the CRA directly. But we can also help our clients with that process and find out what paperwork they need for that as well. That's something that we do for our clients. This kind of name change, very common. The second thing we have to do, because the CRA is going to match and say they didn't have a spouse before, now they have a spouse, we need to tell the CRA that this fact of having a spouse is new. So for each of them, we're going to go to change of marital status. It's going to say, what is the change? And you're going to say, what has changed for them? Are they married now and they were single before, or are they married now and they were common law before? In this case, they were single before, so we're going to pick marriage, single before marriage. Any change of marital status in the year, you will need to do on the tax return as well, because it's going to change the credits that you can claim. It's going to change all kinds of things, so you need to identify that. What form do Billy and Lizzie also have to have filed, or should they have filed by July 31st, 2020? RC65. They probably didn't. If they didn't, that's fine. They're going to change it now. But remember, if they were receiving benefits based on being single and they didn't file that RC65, you need to think about the fact that they were receiving benefits and go and tell them you're going to have to pay some of those back. So that's something to think about. If they did file an RC65, you're still going to do the status change because it's different from last year's tax return, but it's not going to trigger a repayment of any benefits. So, all right, so we're going to do status change from the date of the marriage, 19th of June, 2020, on her and on Billy. We have to do the same. They have to match. If they don't match, you will get an error message because it does not make sense for one of them to have married the other one on 2 different days. Okay, and that's all you need to do. Now that we've done that, we should have a tax return for each of them. What I would like you to do is tell me, what did you get for Billy? I got a small balance owing. And what did you get for Lizzie? I got a larger balance owing. At this point, I would be doing my quality at source, making sure I have all my check marks, which I think I did do. I would be doing a note for Lizzie explaining why she owes. And in this case, I wouldn't have a great explanation until I took a look at how much they deducted at source. And I would notice that her employer is definitely not taking off enough tax. I would put that note in. We don't have time. All right. We're going to keep going. We're going to fast forward in time now, and we're going to move ahead 1 year. And what's happened in this year is Lizzie has come in by herself. So they are no longer coming in to file together. Unfortunately, the relationship did not last. So we have a situation now where we have joined files and we need to separate them, and we need to fix the situation so we can file a return for Lizzie as someone who is separated from her husband. She hasn't gotten divorced yet, but she is separated. So for this, we now have a slight problem because Lizzie was not the family head. I haven't talked to Billy. I don't know if Billy's going to come back and file. I have no information, and I can't go call him and ask. That would be inappropriate. I just have Lizzie in front of me, and she wants to file. So we're going to talk about how to take her file and convert it into a file that is just her, not her and Billy. So right off the bat, the first thing we have to do is we have to switch who the family head is, because I want to make her be the person whose return I'm opening, not connected to Billy. So we're going to go into her file, we're going to say continue, and now where the relationship says spouse of Lee, we're going to change it to the family head. Okay, I'm going to show you that one more time because this is important. We're going into Lizzie's file. It's now 2021. We're going into Lizzie's file and we're going to say change it to the family head. Now it's going to say this is going to swap them, but it's not going to do anything else. They're still going to be together. And it's going to remind me if I want to change that, I need to make him inactive. We will be doing that. So thank you for telling me that, computer. I appreciate the help. I will think about that in a minute. Let's get this set up first. Okay, so I now have Lizzie as the family head. And if I go to the client list here, you can see that she is now the one that is bolded, and Billy in his file is going to show up as her spouse, which is not what we're going to end up with, but where we're going to start. Okay. Now we need to do a little bit of confirming some information. So probably she may have changed some of the other information. Maybe she has a different address. We would want to update it. If she has the same address she had before, we have a problem because there's no address entered in her. She wasn't the family head. How can we enter the address if it's the same one? Well, what I could do is I could look at her spouse, who we're going to get rid of in a minute, but I copy things over. So if she kept the phone number, I can copy the phone number over. Let's assume she kept the house. If she kept the house, I'm going to click on street, hold shift down, click on postal code. I'm going to select all of those lines. Then I'm going to right click somewhere in the pink, and I'm going to say copy to left-hand side. Then I don't have to type it again and make a mistake. Okay. See if I can get some more data here for what is changing. Okay, if she still lives at the same address, she has changed her email to something else. Where is it? Oh, yes, she has changed her email now to Lizzie@hotmail.com. So we're going to update her email. Okay. If she's kept the phone number, because maybe originally that was her cell phone, we can copy the phone number over. We're going to select the phone number. Make sure you hit shift and click on it so it's highlighted. Then you can right click and copy that over to the left-hand side. If the phone number had changed, we would put in a new phone number. We're going to take out the old name because we don't want to have that again. It will carry forward. So anytime you've done an old name, even if they stayed together, you need to take that out the next year. Okay. If she's keeping her name for now, she hasn't decided what she's going to do with it, we're going to leave her name as is. If she changes it back right now, we could change it back doing the same thing that we did before in reverse. Okay. Then we need a marital status change, and this one we're going to trigger in a different way than we did before. We're going to take that married status and we're going to change it to separated. So if I say married, I'm going to change it to separated. You can notice when I did that, it opened up a status change, and it's already filled in that what's changed is a separation. And now I have to have a date for the separation. So if they separated on the 15th of October, I'm going to enter that they separated on the 15th of October 21. Be careful here. If they separated at the very end of December and it's now February, we need to make sure they've been separated long enough for this to be a separation. If it was October and she's coming in February or March, it has been 90 days, so we're okay. Okay. Now I still have a problem because now I have a spouse connected to me. I'm going to have information about her spouse, and I'm going to have to make the current spouse that she has inactive. So I'm going to do it in that order. I'm going to go into Billy first, and in here, what I'm going to do is I'm going to choose keyword inactive. Okay, I'm going to say inactive, and it's going to say why. Why am I making him inactive? Well, he's inactive because the two of them separated and I don't want him connected anymore, so I'm going to pick separated. Then I'm going to go up here and I'm going to take his SIN number out because I don't want to have his personal information connected to her file and I don't want multiple copies. So now when I go into her, it still errors. I have things I need to fix. This is always a slow process. We're going to go in. He's not going to have a SIN number, and you're going to notice he's gray. So he's closed, and they're not connected together anymore. Going back in here, now we need to deal with the fact that she did have a spouse for part of the year, and then she separated. So now I need to go in and choose alimony and spouse not processed. And this time, I'm going to choose the third option that we use. So we've already done when you have a spouse who's not connected. We've done when you used to have a spouse or a person who's paying you support, but not in this year. This time we're going to do ex-spouse, was a spouse in 2021. We need information about Billy to put in here. And that I will get my numbers for you as well. So you're going to need to know his name, which was last name Lee, first name Billy. She will know that information. You don't need his address. You need a SIN number. Hopefully she has it. If she has it, you should put it in. She should make every effort to get it because it is important. If you cannot get it from her, you can put zeros in, or in a real office setting, you can just leave that warning as a reminder that you don't have that. Let's assume that they are cooperating a little bit, or that she has some documentation with his SIN number on it. So in that case, if she gives me his SIN number, I can enter his SIN number in. So I will do that. I need his birth date. She's going to have to tell me his birth date. I can't go into his old file and look it up. She has to tell me what it was. Hopefully she remembers it. And then it's going to ask me for his net income before the date of separation. Again, they need to cooperate with each other to get this. In a good world scenario, they are still talking to each other enough. He's going to need this information about her. She's going to need the information about him. They should share it. That's not always the reality. Sometimes they really hate each other and they refuse. Sometimes they're in the middle of a messy separation with lawyers and they don't want to admit what their income was because they think it's going to come back and bite them. Sometimes you have clients who are in domestic violence situations where they should not be contacting that person for any reason because it isn't safe. What I will say you need to do, if you don't have the answer, don't make up a number, but you do have to think about what you are going to override. Because if I put a 0 in because I don't know the answer, it's going to give her a really big spousal amount. I would then have to go in and optimize, transfer, override that spousal amount and say don't give it because I can't verify that income amount, so she's not entitled to that credit. Okay. If you can get the information, do. So what I'm going to say instead is that she doesn't know the exact amount, but she knows within a reasonable period how much he made. She knows it was about what he made last year. She remembers last year he made about $52,000 over the year. So she's going to assume that it's about the same. We're going to calculate, we're going to go October 15th is when they separated. That's 288 days. So I'm going to take 52,000, multiply by 288, divide by 365 to get a reasonably close estimate, which in this case is 41,030. I can put that in. My TOSI net income will match because for this purposes of this course, your TOSI net income will always match your net income. We're not dealing with complicated corporate family structures, so TOSI net income should match. If it's close enough to the amount that will generate a spousal amount or other dependent-related credits, you need to do a little more digging and investigation to be careful. If you're going to give them a credit based on that number, you need some more accurate information. If it's going to override the numbers and it's close enough, it's close enough. So we have put in the 41,030. We have that he was an ex-spouse. We have dealt with everything we have to deal with there. Now we can go, sorry, this should say Lizzie's income 2020, but I can go in now and I can do a tax return for her. So I'm going to have a T4, and it's going to be the same company, Airport Supply Limited, and I'm going to have 49,000 And Manitoba, 247,975, 77420, and 8,000 was deducted. And it's going to ask me to double check that number. Oh, I put them in the wrong place. 247,975, 77420. Nope, I didn't put them in the wrong place. It's going to ask me to verify them. Ah, that's why it's doing it. 49. See, this is how you catch your double entry errors. So 49,000 makes more sense. I can confirm that I have now done my data entry correctly with a check mark. Generate a tax return. She's going to still have a balance owing. We're probably going to recommend, which she should have done last year as well, her employer needs to start taking some more tax off. We can file her return and she can go. Okay. We're not done yet though, because a week later, Billy is coming in and he would now like to file his return. Okay. This is the scenario where we are going to do cloning. I'm going to suggest very, very strongly, if you're ever having to do cloning, that you are referring to your textbook for two reasons. The first thing I want you to do in your textbook, I'm going to go in here and I'm going to open the section on cloning. When to use cloning. Specifically, you will only use cloning in the situation where you have two single taxpayers who already exist in your computer who are now going to be joined. I'm going to teach you how to do that briefly. Or if you have a relationship with dependent children, again, this is information that's already in the computer that we are now going to join. If you have, the couple has separated during the year, but they both want to file, so they used to be together in the system, now they're separate, but they both still want to file with us, which is what we're going to do next, which is Billy. If you had a family member who is in the system and now they're going to be moving and becoming a dependent, then you would clone them into a family. Or if you had a child who was separate, but now they're moving back in and they're there. So this is for files that already exist in the computer. If they don't exist, you don't need to clone anything. You just need to create a new dependent or a new spouse and add them together. But if they're already in the computer, we can avoid using a lot of extra data entry. The personal information is already going to be in there, and we can just clone together. The second thing I'm going to say is if you have to do cloning, please read over this section first, again, before you do it. Because in real office settings, you cannot delete a file. So if you mess up your cloning and you do it wrong, you're going to create a duplicate file that's incorrect that you can't delete. Then you're going to go back in and try it again. And if you mess it up a second time, now we have 3 copies of that client and 4 copies and 5 copies. And we do see this happening. So before you clone, first of all, get help from someone who knows what they're doing. And second of all, make sure you're being really careful about it before you do it. See if we have time. I'm going to show you cloning on Billy first. So for Billy, he has come into the office. He would like to have his own file. I'm going to click on Billy's file here. He is currently inactive. That's fine. And then I'm going to say Tools, and I'm going to say Clone Family Members. And when I clone the family members, I'm going to clone the current individual. If you have a bunch of dependents connected to a person, try to clone someone out of that family to keep all the dependents together rather than trying to clone multiple dependents. It gets really messy. So organize your file before you clone it, then clone it. Okay. Never clone all members of the family. All you're doing is duplicating a file. We don't need a duplicate file. Okay. If I clone Billy out, I want to make Billy, who's still in the file, inactive. So if they had come in together and said we want to separate our files, we would have done this in a single unit. We would have done the first person, cloned them out, made the other person inactive. And then you can add to a new family or you can add to an existing family. So maybe Billy met someone who is a client of ours and he wants to be added to that person as a spouse now. In that case, I would choose add to an existing family and I need to enter the client number. So if the person that he is now in a relationship with is Paul Little, I would add the client number, in my case of 16001. It would connect him. I don't want to do that. He's just going to be his own family now. I'm going to say add to a new family. I'm going to say OK. And you're going to notice now I have two versions of Billy. I have grayed out Billy number 1 and grayed out Billy number 2. Grayed out Billy number 2 is my newest version. I'm going to double click on that and I'm going to say reactivate the client. If I reactivate him, I'm going to have to put a SIN number in for him. I'm going to have to do his change of marital status. This is separated. I'm going to have to do all of those things again to make his file his own now. You are going to lose a lot of your carry forward data. So when you clone someone in or you clone someone out and you go and you look at their comparative summary, you're going to notice all that data is no longer available because we have created a new file for this year that is a different file from the old file. So that's the other reason I don't want you to be cloning if you don't know what you're supposed to be doing, because what happens is then as a senior associate, I'm going to come in and I want to be able to see that comparative summary. I have to go look at 3 or 4 or 5 different versions to find everybody's actual data, and it just causes problems. All right, so that's how you clone people out. Again, you could clone people together. So maybe I have Gloria McMahon who has met Terry Mason, and now they're going to be a family together. I'm going to pick which one I want to be the family head. I'm going to write their number down. I'm going to go to the person I want the spouse to be, and I'm going to say tools, and I'm going to say clone family members into an existing family. And then I can clone them in as a dependent. If they're a dependent, maybe it's an adult parent moving back in or an adult child moving back in with their parents, and we want to be doing transfers between them, and we'll add them as dependent. If I leave it blank, it will add them as a spouse. Okay, are there any questions about cloning? Mostly I'm going to say don't do it unless you're sure you need to do it. So that when to do it is really useful. You're also going to have when not to do it. So do not use the cloning feature if it is dependent moving out. Just make that person inactive. You don't need to create a file for them if they're not coming back to the office to file. They're going to go somewhere else to file. Make them inactive if you can. Only clone them if you need a new file for them. If you're doing tuition credits, if you have a child who lives in a different place and now you have parents, you don't have to clone them in and add them together. You can do the transfer of tuition to a parent that's not connected. So do the data entry the simple way without making an extra file. Or if the only person who's going to file in this situation was Lizzie and Billy wasn't coming back to our office to file, we wouldn't clone Billy out. We would just make him inactive. So make them inactive. Don't join them unless you have to. But if you have to join them or you have to separate them, that's what cloning is for. Whew, we did it. I can't believe we did it. We have 1 minute left. So what I'm going to say very briefly, if you're stressed about the exam, we have 1 class left, and then you have a break to study and practice, and then you have an exam. The exam itself, you will get a case or cases. You will get some instructions about a file or family or a couple of families that you have to prepare tax returns for. You're going to get that in advance, so you will be able to open it and download that section. You can work on it in whatever time you want to work on it. When you have it done, there will be instructions in there for what you need to print or what you need to have available to look at, and then you're going to have a multiple choice timed exam for 3 hours that's going to ask you questions. It's going to ask you about your quality at source. It's going to ask you about your data entry. It's going to ask you about line numbers, just like you had on your assignments. Except this time we're testing whether or not you know how to do the computer software side of things. Okay, so that's what it's going to look like. All right, so I will give you some instructions for what to practice for next class. We're going to have a wrap-up class next week with our administrative things and all of our provincial credits. Have a really good weekend. Work hard on your practice problems, and I will see everybody next week.